about 15, 20 seconds of thought, and then we'll get into the more important article. But I thought this was great. I think it's a sign that these conversations are being had behind the scenes. And I think more importantly, it's a sign that we're already in a new era. We're not waiting for that era to come to fruition. This is the era of adoption for the United States of America. Floor is yours.
Yeah, Abs. We have known Grayscale actually, Abs, has been a longtime supporter of the XRP technology. I don't know if you know this, or maybe I know you know this. I don't know if our chat knows. I should say is XRP was one of its holdings prior to the SEC lawsuit in 2021 or 2020. Oh, 2021, I guess, because that's happened at that time frame. And then what did they do? They dropped them like a hot freaking potato, just like everybody else did, other than Uphold. Kudos to Uphold. Everybody else freaking dropped XRP relatively quickly. Nobody wanted anything to do with it, including Abs, Grayscale. So part of it, like I see it, and I'm glad Grayscale's back, but the hypocrisy does kind of aggravate me a bit that they were scared and they ran off the court, where Uphold stuck to their guns. They're like, no, we're not running. We're gonna stay here. We're gonna continue to support XRP, and they stood there with it. And Grayscale didn't. But the good news is Grayscale's back. They're bandwagon jumpers, and they are huge, like Harry says. You're right, Harry. I think it's going to bring credibility back to the XRP space. And the nice thing is with an ETF, that's going to drive some volume. That's good. You talked about market cap. You talked about increasing. That's right, China never for Italians. We never forget, my friend. We never ever forget nothing. Don't ever forget that. We always keep it in the back of our memory. But the reality is, at the end of the day, I think this is good news for XRP. It's going to help drive. We just talked about the market cap. We're going to need to. What is this? Ripple XRP is going to say. We're going to need. We need things to drive the market cap up. Utility and adoption is the best way to get there. But I'm not going to lie and say that an ETF wouldn't help. It certainly could. And especially because don't forget, Abs, XRP is such a big army around it that I feel like the army itself would do a great job of helping to promote, hey, we got an ETF out there. But the reality is, will the brokers pick up the phone and will they call their customers and say, hey, we have a new crypto ETF. This is something you should get into. And the question is, who's incentivizing that? And will Ripple incentivize that? I think if they do, we'll see some good growth there.
Agreed, guys. We got 18,800 people here, over 1,500 watching on YouTube. If you'd like to Abs would destroy that guy with the flick of a finger. Whoop-ah! Guys, click the like button for me. And obviously, we're keeping it lighthearted. I'm not all thrown off by that comment, but if anybody who did see that comment would agree, instant block forever for that person.
I didn't see the comments, so I don't know what we're talking about.
It wasn't a personal attack on us. It was something that was said about governments. So it was very, very interesting. I'm not going to talk about it, to be quite frank. If you want to know what the comment was, smash that like button. Help us break 1,000 likes. I'm just kidding, guys. But seriously, we got 3 minutes left. If you could, help us break 900 likes on the episode. We're going to do a little bit of overtime. And what's cool about that is we got Johnny Crypto here. So whether you smash the like for GMC or smash that like for Johnny Crypto, we're going to be breaking down some fun topics. And this is going to be a pretty interesting one because there is a lot of people who saw this video who do not have the crypto knowledge that our live chat has, right? So there's a lot of people who see this video on Yahoo Finance and go, wow, XRP really is a scam or it's going to zero. We have to dispel those claims on our show. A couple of big statements that you're going to hear. I see a lot of fundamental flaws in XRP in particular. That fragmentation of trust will really lead to the breakdown of the network. Now, we're just going to play this whole thing and discuss it. It's a fun clip. I think our listeners will enjoy this. This man, he does have a big platform, so it's worth breaking it down. Here we go.
I see the downside less in terms of impacting Bitcoin in particular and more pertaining to other altcoins, specifically Ripple. There's a lot of positive sentiment in the market for Ripple right now and a lot of excitement around Ripple as potentially a strategic reserve. But I see a lot of fundamental flaws in XRP in particular, and honestly view a strategic reserve backed by Ripple as being the demise of the network itself for a number of reasons.
And there's a little bit about RXP. You seem to be hot on that issue. Certainly, we have seen a massive surge, to say the least, up by 50+%, I believe, since the start of the year. When you talk about worrisome signs here, why you are a bit concerned, lay that out for us.
So it really goes back to the fundamental behavior of how Ripple itself operates. XRP, the token, runs on the XRP ledger, a decentralized ledger of sorts, which has largely been scrutinized for being controlled and manipulated by Ripple Labs, an independent organization that I somewhat view as smoke and mirrors. Ripple Labs maintains a lot of influence over XRP, particularly how networks are validated by selecting a node list of validators that process all transactions, and most participants in the network use Ripple Labs' default node list. So what does that really mean? Why does it matter for all of this? I actually view this kind of weakness and fail point in the centralized aspects of Ripple as really being why the government would even consider it to be a key candidate for reserve, because they could actually purvey mass regulatory overreach and influence to ensure that any transactions that occur on the Ripple network itself comply with all US regulations, comply with all nation state laws.
Let me make it simple. He's describing XRP as a central bank digital currency. I'll break it down. I just want to clarify. Here we go.
And particular transactions from particular institutions or nodes domiciled in particular geographical regions. And that fragmentation of trust will really lead and ultimately result in a large breakdown of the network itself, potential forks, loss of network value. And then it just kind of begs you to ask the question, what's the point of this decentralized token at all? It's not going to compete with Visa in terms of speed or performance.
Yes, it is.
It's not going to compete with anything that we know from a centralized perspective, but yet it will become a captured network in that respect. So I view it as a quasi-centralized token that doesn't necessarily have fundamental competitive strengths with existing centralized projects, and by no means has a place in a decentralized ethos.
So let me just say one thing. I'm going to kick it straight to you, Johnny. I played a video yesterday of Brad Garlinghouse doing an interview from this month, very recent interview. And what he talked about is what Ripple's mission is to be the bridge between TradFi and digital assets. So their business model is built on incorporating the money that's been accumulated by BlackRock, by JP Morgan, by Citibank, by Bank of America, tokenizing it and bringing it on chain. Now, what this man is doing in this interview, and I'll give him kudos where it's due, he has a very suave way of spinning that to saying that Ripple is pro-private institution. I can debate that, and I have debated that on many Twitter spaces. I want to give a big shout out to Mikkel. He's phenomenal at this as well, is that Ripple's business model, and the reason that people like the World Economic Forum and the US government are excited about this is because they're bringing all assets on chain. There's only two ways to expand the American economy, right, Johnny Crypto? That is more production or more money. We don't want more money. We got enough money in our economy circulating, diminishing the price of goods right now. What we need is an expansion of our economy. We need new value being generated. And this is one of the ways that you can generate new value without diminishing the cost of the dollar. You can expand the economy into a digital environment, making illiquid assets liquid, giving ownership rights to people who never had access before. And for that very reason alone, not even talking about the stablecoin or on-demand liquidity, I believe Ripple's going to be a massive success. And this is one of the reasons I'm so excited to interview Austin King, a former Ripple employee who worked with David Schwartz, that states constantly, publicly on his Twitter account, the real mission behind Ripple is making the XRP ledger a base layer for tokenized assets. It's exactly what Mark Yusko said on our show. It's exactly what Scott Melker is indicating in some of his private conversations. And now we're talking about it here because there's a negative spin on this and there's a positive spin on this. The negative spin is what we just heard 2.5 minutes of. The positive spin is that if you're smart enough as a retail investor to hedge yourself within this project, you're going to make a lot of money over these next 12, 24, 36 months. That's my opinion. I do not have a crystal ball. Maybe I'll go purchase one on Facebook Marketplace. Floor is yours, Johnny Crypto, and then we'll continue.
Yeah, at the end of the day, you got to take all these guys with just a grain of salt. These guys all have their own opinions. This guy obviously is going to hang his hat on the fact that, everybody brings this up all the time, that, XRP is not decentralized. They picked who the node validators are. And so because of that, people have made the argument that they're not decentralized. That's not entirely true. They don't control all the node validators. And so that's the difference. But there's no point in arguing with a guy like that. He's entitled to his own opinion. He's wrong, and he's going to get proven wrong in the long run. And that's all that matters, is we know kind of what they're trying to do. The second thing is really the most important part, is if you look at Ripple's business model for XRP, it's morphed. It's no longer just purely cross-border payments, CBD solutions. Its tokenization is going to be where it wants to really play. And its RLUSD stablecoin is also going to be another thing they're going to be driving usage of, and drive that up, and then use XRP Ledger and XRP to manage it. So the reality is there's going to be huge opportunities for XRP, but listen, there's going to be haters all the time. And it's good to listen to the haters and then dispel what they're saying. And at the end of the day, again, he's irrelevant in this. He's not a decision maker. He isn't going to decide whether Visa or Bank of America are going to be using this technology. So
another
me,
false narrative, though. Another false narrative.
That's what it is. You're right.
He goes, XRP and Ripple products won't replace Visa and MasterCard. I go, why not? I'm not understanding. What's your logic? It's cheaper, it's faster, it's better. People like us are incentivized to transact in instantaneous value as opposed to debt. Why would I use a credit card by Visa if they're going to charge me a percentage where I can do the same transaction for free on the XRPL?
Exactly.
Explain it to me like I'm 5.
Yeah, and then the reality is what he was really trying to say is he didn't believe it can do transaction speeds fast enough to be able to handle. I think Visa needs like 1,500 transactions per second, and the reality is XRP, I believe, can actually handle something as fast as that. So the reality is, we will see XRP being used in those situations, exactly ones. And you're right, he created FUD for those people who don't understand, and that's why there are shows like ours to be able to dispel the FUD that's out there. And if you are watching our show, then you're in the right place because you are going to hear stuff like this. It's going to go on. You're going to hear, you guys ain't heard nothing yet. Trust me, it's going to get worse. I've been through technology evolutions when we were trying to do Bluetooth and all, figure out when we were doing short radio range, what was going to be the technology. There were 10, 12 15 different technologies. And everyone was bashing this one's no good for that reason. That was no good for this reason. That's a piece of garbage. That's garbage, and it didn't matter. Once Apple said, hey, you know what, we're using Bluetooth, it was game over. And once at Bank of America or a few banks say, hey, we're using XRP, it's game over. Doesn't matter. So the reality is what you're looking for is to hitch your wagon to a couple good horses that you think can solve these. And everybody who's here understands that Ripple, or I should say XRP, is a technology where it can solve a lot of these issues. And you'd heard Joel, I call Joel, David Schwartz come out. His Twitter name is Joel's Cats, but he's come out and dispelled this as well about this whole idea of it not being decentralized. And that's the biggest knock. I remember even when we had Mark Yusko on for the very first or second time, he came out and said they didn't invest, Abs, if you remember, in XRP because he didn't feel it was decentralized enough. And I think we've had many, many people from the company itself come out and dispel that ever since. And we now know it is decentralized. It's decentralized in a different way. And I think that's the part people have a problem with, rather than it just being a loose network of random nodes because they selected a few of them. People are holding that against them. I don't personally think. I mean, what's the difference in a centralized solution where you're fully centralized, where you get to make all the decisions? Here, I'd say it's kind of semi-centralized. They picked a few, but there's still a bunch. Yeah, exactly. It's sufficiently decentralized. You want to talk about Hinman, this is one where you could actually argue that XRP is sufficiently decentralized.
Here's when you know you're winning, Johnny, when they can't tell the truth because there's nothing nefarious there, right? They have to lie about this stuff to people who are uneducated on these topics, because anytime somebody who's done their research gets in the same room with these people, they crumble. And we've seen a lot of that over these last few weeks with Bitcoin. I own Bitcoin. Johnny owns Bitcoin. I know that for a fact. We want Bitcoin to succeed, but I make no mistake about it. I do not think this is a winner take all market. And I do not think if it was, Bitcoin would win. Even if this was a winner take all battle, I don't think Bitcoin would be the one that survives. Now, let's break down some of the reasons I believe that. We got 1,500 people watching on YouTube. Support the show, guys. If you enjoy this free program, show us some love. Smash that like button. It's totally free to smash that like button and support us. That helps this video get pumped out to as many people as possible. Now, we do have 20,000 people on all platforms. Let us know in the live chat as well. Will XRP break its all-time high in February? I believe it does. And we're going to go through some chart structures at the end of this program today, kind of highlighting why I believe that's going to take place. But this is a great thread that was put out this morning by Austin King, the former Ripple employee that we had just mentioned. Most people don't understand the impact of the Ripple stablecoin will have on the XRP ledger. If you think this is just about a stablecoin, you're missing the scale of this opportunity by over 1,000x. Here's the actual strategy that Ripple is pursuing and the impact it will have on XRP. Great picture of Brad, by the way. So RLUSD daily volumes are already exceeding $300 million. Additionally, dozens of teams are working with Omni to integrate the RLUSD into their products. While this is all exciting, it's just the tip of the iceberg. This week, Ondo Finance announced they are launching a tokenized treasury bill on the XRP ledger. If you've been following Austin for a while, you may have seen this coming. Now we're starting to see the next stage of Ripple's actual business strategy. Step 1, prove out tokenization technology by launching RLUSD. And Johnny, I deserve to pat myself on the back on this one, because when Ripple first launched their stablecoin and the news came in August, I said, this is a beta test for tokenized assets on the XRPL. That's what Austin King is stating right here. Step number 2, begin expanding with low-risk tokenization assets like treasury bills, which is in the low trillions. Number 3, tokenize debt and equities, which is tens of trillions. And step 4, tokenize the derivatives market and beyond, hundreds of trillions of dollars. Ripple is going to bring trillions, this is a direct quote, from traditional finance onto XRP. And Omni is going to expand those trillions across the rest of the on-chain financial ecosystem. Here's a little video, short video here from Austin King, kind of expanding on why Ripple is built to be the tokenization layer for everything.
What are other projects that you're excited about within the crypto ecosystem, Austin?
There are a ton out there. I'm really excited about stablecoins. That's one that I think is offering very concrete financial utility for people across the world. Specifically, Ripple's new stablecoin is one that I've been saying or paying very close attention to.
What about that new stablecoin is on your radar?
Yeah, so I sold my first company to Ripple. I've been very involved with that company for a very long time now. And I think just throughout the years, they've been around since like 2013. So a decade of building relationships with existing financial companies is something that I think is super important when you're trying to drive adoption of these new technologies.
Anything else for 2025, Austin?
For 2025, I think the growth of like real world assets, so like treasury bills on chain and tokenized securities, I think is a huge area for growth as well.
You heard it right there, guys. Tokenized assets. This whole journey begins here in 2025. And you know what's often I guess it's not discussed enough, in my opinion, Johnny Crypto, is we focus on the price action, but we never focus on the why. Why would 500% gains come into a project like XRP? That's not price chart. That's not trader action. That is people understanding what's coming and hedging themselves in that ecosystem, which is exactly what we've talked about the US government doing with the reserve. So I did just want to get some of your thoughts. 500% gains coming for a reason. I believe this is the real narrative. I think this is the be-all, end-all for the XRPL, a tokenization layer for banks and financial institutions around the world.
This would be a great time to show my speculation versus adoptability chart, if you had it, to answer your question of why. It's speculation, my friend. That is why you're seeing 5X. People are speculating now. People are starting to see what could potentially be real abs. They're starting to learn more about, there is a little smoke here behind, that could lead to a fire. And they want to be involved. They want to get in. They want to be early. They want to be in front they want to front run this thing. And that's what speculation is all about. It's about getting, a sense for what you think could be driving it. And that's it. I mean, that's a big part of it. And Austin King's very, very sharp. And I'm very, very happy to say that, I believe we're going to have him on the show. We've been working with him and talking to him. So guys, stick to the show, because we are always leveling up with our guests, and we will be getting him on. But I'm excited to talk to him. I'm really excited for us to talk to him. But the reality is, he's excited about it. He just described, and we talked about this yes, pat yourself on the back. Don't do it too hard. Don't hurt yourself when you do it. We don't want you to break your arm when you do it or pull a muscle. But the reality is, there is a big thing at stake here. And to me, what I've said over and over again, and you're seeing it happen, is Ripple has morphed their main thing when they first started was all about cross-border payments. Now we're talking about tokenization. That is where the real money is going to be at, abs, and they are nailing it. And that's what the RLUSD allows them to start bringing that on board. XRP will be the underlying base of that. And to me, it's going to be huge. So I'm very, very excited for where they're headed with the technology and how they're going to be a key integral part of the tokenization piece of it. Because as Austin King called out, the derivatives piece of this, abs, is massive. It's in the trillions. And so that, when people say, Johnny, what's it going to take to get XRP price up into the high ranges? You need derivatives. If we start tokenizing derivatives, dude, the price is going to be ridiculously high for XRP. And so we will be sitting there on islands together. No doubt about it. That can happen. But we got to give this stuff time. Right? Give it, and that's why it's so important, not cheap plug here, but to have an exit plan, right? Take advantage of some of this on the way up. I don't know how long it's going to take. It took 20 years for Amazon to go from $120 to $3,300. I'm not saying it's going to take that long for XRP. I'm just saying these things take time before markets actually mature. Now, don't get me wrong. When we tokenize the world, that's going to happen relatively fast, in my opinion. But first, that's attaboy. Yeah, all right. No, we'll put a little ice on that bad boy. Ice it up. You'll be okay. But yeah, Abs, what you have to understand here is first, we've got to create the technology and get everything working. Once you get it working, I think the process of tokenizing everything is going to move a lot faster than it took for the internet to come to full bloom, because we have the technology in the railway, we have the internet built, the highways built, the freeways, if you will. Now, the next layer of that, which will be blockchain, needs to get built. But once it's built, we'll move relatively quickly, and I think you'll see, maybe within 4 or 5 years, the whole world's tokenized. Who knows? I think it'll be way, way faster than it was, for what it took for the internet to come to full fruition.
Here's what we know for sure. Ripple is predicting the tokenization of real world asset market, which is like $10 billion today. They're anticipating it's going to be $16 trillion by the year 2030. They've also
there you go.
Yeah. And they've also came out and made the statement before that they believe the stablecoin market alone by the end of 2027, by December of 2027, which is real soon. We're going to wake up. It's going to be 2027 before we know it. They think the stablecoin market's going to be over $2 trillion in value. So they've hedged themselves in tokenized assets. They've hedged themselves in the stablecoin market. They've hedged themselves in the speculation market. Now
everywhere.
Yeah.
Abs, that's what, and we talked about this, right? We said they started out as just a cross-border payment solution. Then they went AMA. They started doing acquisitions, and now they're going, and then they went to a marketplace, NFTs, and then they went to, now they have tokenization. Dude, they are literally playing they are wrapping up all the spots where there's value. And they're so big, and they've got so many connections. Now, they're not going to win in every single one of these. They're doing the same thing. They're starting to put, horses in every camp to see which one is going to win. They're going to win. I don't know exactly which one it is, but the one I want them to win, I don't care about cross-border payment. I want tokenization. They win the tokenization battle, it's game over. That's just my personal opinion. You can all disagree with me. But to me, I think the fastest way for them to grow and to see the value of XRP grow would be through tokenization. I think because it's just it's a massive prize pool. We're in the quadrillions from what I heard. It's massive. So we'll see. We'll see when we how it gets there, Abs. But for me, it's so exciting that not only do we have, I think, the opportunity to invest in XRP, but dude, there's also opportunity to invest in Ripple, the company. Dude, they haven't gone public yet. They are still pre-IPO, guys. So if you're an accredited investor through products like Link2 Abs, you could actually invest in Ripple, the company, and own some of them too. And for full disclosure, I do. And I'm excited about not only, you just talked about it, not only am I excited about XRP and its future growth, but what about Ripple, the company? Dude, it could be like the Amazon of blockchain. You know what I'm saying? I think there's massive opportunity there. And I know there are people in our chat, they've said it. They've got Ripple, the shares as well, the pre-IPO. So I think it's just a great, great opportunity to be able to diversify your portfolio and play in both Ripple, the company, and XRP, the token.
I agree, guys. And the market cap for XRP is so much smaller that a couple of these narratives could totally change the game for a lot of our investors. And Zach Rector made a great point, Johnny. I think you'll appreciate this, is that all these new investors. So first of all, XRP never had a daily close above $3 ever until 2025. After yesterday, we got 15 daily closures in this calendar year alone. Now, why is that important? A lot of new buyers coming in at higher prices. The old XRP community were the 50-cent investors or the people who bought during a bull market who were waiting to get back in profit. Now we're going to have this new class of XRP investors who aren't even considering taking profit until they're at a 3-4x from where they are today.
Bingo. Huge point, Abs. Absolutely. Right. We were all coming in and we were buying at 18 cents, 24 cents, 40 cents, right? We bought in that beautiful, beautiful stable coin area. We were like a stable coin for 3-4 years at 50. between 20 and
No,
50.
it's so true. It's true.
I remember, right? We were talking about, everyone was like, oh, Johnny, you were in that stablecoin XRP, right? And the reality is now that we've elevated to this kind of $2 to $3 range, people are now coming in at that zone. Eventually, Abs, that's going to be, if you will, the new kind of support level of where we are to launch to the next level up, which we'll see how high we can go in 2025. I think we'll see it'll be a launch pad, but I feel that we are building a very nice base in this $3 area. And so, people aren't going to want to sell. They're not going to want to lose. And that could bode well for all of us that are in at a much, much lower price. And why, you got to kind of, for me, this is one of those, it's a long-term play for me. It's a very, very long-term hold. I'm selling a little bit because I have a exit plan to take some profit. But the majority of it, dude, I'm taking this with me to the future. And I think most of us are, because of the fact that we see the upside potential in XRP. No pun intended. It's off the charts.
I agree with that. And we've talked a long time about how we didn't have reason to be excited, right? We came through that treacherous time. And it's interesting because you can always tell a new investor from a savvy veteran. Davin commented, all this news in XRP and it doesn't do anything except go down. Guys, we are up 505% in the last 70 days. So all that tells me is that you're a newer investor, and welcome in. Welcome to the community. Do not be disparaged by some of this sideways trading. Now, one of the things that you actually need to take into serious consideration is what kind of an investor are you? Because if you can't stomach the volatility, guys, if you can't overcome a lot of the volatility and the negative emotion that comes with that, then you're going to get crushed in the crypto market. What we've seen for all of our long-term listeners is that we watched XRP go from 50 cents to over $3 in only 60 days, and you're still seeing a large member of the community complaining. So again, you got to put this into perspective. If you're a long-term investor, don't focus on short-term price action. And if you're a short-term investor, know what you've entered. Know the project that you just bought into with XRP is up 500% in 65 days. So keep in mind, this is a positive time. There's so much to celebrate in these next 8 to 12 months. I think XRP is going to continue to go up, and I think XRP investors are going to continue to make a ton of money. But if you don't have the right mindset and you don't have a plan in place, you're going to get cooked, crushed, and served for dinner by some of these veteran crypto investors. And that's coming from someone like myself who has learned that lesson the hard way back in 2021. I'm already taking profits. I've already changed my strategy. And maybe most importantly, guys, for a lot of our investors, you're going to have $100,000 days. I want you to embody that, because as you go through that, that is overwhelming as well. Whatever your perception of a lot of money is, some people think 10,000 is, some people think a million is, some people think 100 million is. Whatever your perception of a lot of money is, chances are, depending on your exposure, you're going to have a $10,000 day, a $100,000 day. Maybe if you have a ton of exposure, $1 million day on some of these projects. And our listeners have probably been through this, because if you had $500 in XRP, Johnny, we're going to use small numbers. If you had $500 in XRP on November 5th, that is now worth over $2,700 today, and people are complaining. So put this all into perspective, right, guys? And I know a lot of our veterans aren't complaining, but I don't want our newer investors to get cooked by emotions. That's the whole reason I just gave that little speech. We are going to play this brand new video here, guys. This is Anthony Pompliano. I'm going to give Johnny a chance to respond, but this is a video of Anthony Pompliano, very outspoken about the Bitcoin community. He's talking about his relationship to Ripple and XRP from a few years ago and how their business model is actually better than Bitcoin. So
I can't wait to hop into that. But you touched on something that I think is important that we address on this show. I love what you did there. Is that guy who said, "Oh yeah, the news is out and it's not going up." My friends, you need to learn how this game is played. And I understand, Abs, that people think markets are driven by news, but and they are, but not the way you think. You have to understand that markets are driven by very, very smart, super smart money people that have inside information that we don't have. And they're going to drive a price in a direction that they want it to go so that they can buy or sell. They're either going to buy it or they're going to short it. Okay, guys, they have two choices. And you, my friends, are the ones they're stealing it from. You have to understand when you get into a market that the whole point of a market is somebody puts money in and somebody takes money out. It's a zero-sum game. Somebody's going to win and somebody absolutely is going to lose. If you come into this space thinking, because when you make a comment like that, and I'm not picking on the guy, but I'm just saying the way I interpret that comment, when you make a comment, oh, news comes out and it keeps going down. Yeah, that's how the market works. They sell on the news because they know you are going to do exactly what you thought was going to happen. You thought it was going to go up. So what are you going to do? You're going to hold it. You're not going to sell. You're going to hold it. They need you to hold it so they can sell it on you. Because if you're selling and everybody else is selling, prices going down, they can't make money, my friend. So understand the game, how it's played. The news is used to take your money away from you. Okay? The rumors, the FUD, the fear, that is used to get you out, to get you to sell so they can buy it for cheaper. There it is, my friend. You just got the education for free because you're a GMC member now, part of our community. And that's what we want to do is educate you guys on how things work. And the third part of that whole thing is most of those people that are there, thank you, Rob. This is for you guys. Most of the people who are there, Abs, who make comments like that are in here. The big, that's great. I'm happy to be your big brother. You know, make sure you come to the academy and give a hug. But the reality, Abs, is most people that come here into this space right now, let's be honest. We know a lot of people are here and they tell them to make money quick. This is a get rich quick scheme. That's what everybody thinks crypto is because of what you just said, Abs. Price can move up and down extremely high because of its volatility. Well, get rich quick also means get poor quick. And most likely, you're going to get more. You're welcome, Brett. You're going to get more poorer than you're going to get richer 90% of the time because you are playing against the best chess players in the world that have inside information. Imagine that. You're playing a chess game, Abs, and the guy you're playing, like you're playing against AI. He already knows every single move you're possibly going to make. You can't win. But yet you're trying, and you have no education, and you're trying to win. Uncle Johnny, that's a good one. You know, so the reality is just go into this game knowing that if you invest in things, this is the whole point of more. Sorry, it took me forever to get here, but we had time. If you're going to invest in stuff, you're investing in it not because you're going to get rich quick, but because right there, it's a generational wealth opportunity because you believe you're investing in something that while in the short term, the smart money is going to steal your money. In the long run, if you're investing in the next Amazon, who gives a shit? It's going to be $3,300 someday. And you're going to make money. You can't screw it. You can't F it up, as Raoul Paul says. That's why I don't care about the small short-term plays because I know long-term where we're going at. I hope that helps. Hope that helps you guys. If you're new and you're trying to figure out the space, you now know, don't look at the news. Don't expect it to go up on the news. You should expect it to go down on the news. I actually even told this to Abs. I bet when they announce that the case is dropped, everybody's expecting us to go to $10. Just the way when the judge settled it, and for those who don't know, I said on this show, the price is only going to go to 80, 90 cents. I said, no, you're crazy. It's going to $5, $10. No, you know what? It went to 80 cents because that's where the fair value was before the lawsuit happened. So it made sense. That's where we're going again. Well, this news, why we're at $3, in my opinion, Abs, is already baked in that the case is going to get dropped. So when the actual news comes out that the case is going to get dropped, okay, I don't know if that's a good or a bad thing, but when the news comes out that it's getting dropped, I know everybody's going to expect this thing to go to $10. I think we'll get a spike, but then I think we'll come right back down relatively quickly. Maybe we'll go slightly higher. But point being is, I think a lot of that news is baked in. So, guys, just understand how the game is played. I know I spoke way too long.
No, I appreciate it. You don't need to apologize. I think that was awesome, guys. Big hashtag Johnny Cryptos in the live chat. Now, a couple of things I want to expand upon in this conversation. First of all, we're 27 minutes into overtime. If you enjoy this show, help us break 1,000 likes. I believe we're almost at 1,000 likes right now, so smash that like button. Johnny, I think what's a little bit difficult about being a content creator who we talk to a lot of people all at once, right? There's 23,000 people here. That means there's 23,000 different brains hearing a different set of information, right? Yes. The most important thing that our listeners should take away from this conversation right here is that if you want to be successful, you need to have a plan. And that's what we talk about every single day. Whether you're trying to make $10,000 or $100,000, you need to take advantage of creating a plan. I always give you the very simple step. Take out a sticky note, write down a financial goal. The next logical action is what returns do I need to get there? If I have $10,000 and I want to make $100,000, I got to find a 10x in the market. If I have $10,000 and I only want to make 20, I just need a 2x in the market. That doesn't matter if XRP goes to $5.89 or $50. you're going to hit your exit target. So that is why we talk about Merlin every day. Check it out. 30 days, absolutely free. Take advantage of this free exit strategy. And if you really enjoy it, become a monthly subscriber so you can make as much money as possible during this crypto bull market. Now, just to make it very simple, Johnny, what you stated, I believe is absolutely true. If we're going to front run the institutions, it means we're in a speculative market. If the institutions were already here and this market was already regulated, I wouldn't be able to sit here with my chin up, chest out, as they like to say, with so much confidence and tell our listeners, you're going to make a lot of money in 2025. I'm not just saying that. I genuinely mean it. And people who watch this show in 2022 and 2023 and even in 2024 knows that I was not that confident about those calendar years. This is our year. This is the time for the XRP community to shine, as well as many other projects like Cardano, like Stellar, like Hedera, like Quant, Chainlink, AVAX. There's plenty of opportunity out there. So if you haven't, create a plan today, figure out exactly what your exit targets are going to be. The thing that I was getting at, Johnny, is it's easier as a content creator to go like this. Guys, XRP is going to go to $500. You're going to make a ton of money. Thanks for tuning into our show. Everybody's excited. Here's the problem with that, right?
Yeah.
Here's the problem with those clickbaity kind of topics is that if we don't hit those price targets, our listeners get cooked and served in the process, like the analogy I just used, where you're going to be used by the veteran investors as exit liquidity. So we want you guys to be the veteran investors. We want you to say $5 XRP. I'm super excited, but I'm also taking 2% of profit. I'm also taking 5% of profit just to hedge myself in case we go back down to 3 and then I want to re-enter, or I'm waiting for a bear market in totality and I'm waiting for that $2 XRP once again. So just because you're taking profit doesn't mean you believe the project's going down. You're just hedging yourself like the billionaires and future trillionaires do in the crypto space. That's it.
Bingo. Abs, you nailed it perfectly. Is the smart money? They're always taking profits. They're taking profits on the way. They aren't just waiting at the very top. They're taking profits along the way up. And that's what we're trying to teach you guys. And then we get ripped all the time. I say on our chat, you're crazy. I sell my XRP. No way it's going to 100. Why would I sell it? Okay, you don't have to. But the point is it's going to go up. It's going to go down. It's going to go up. And you're going to like miss opportunities to be able to double, triple, quadruple your bags. And that's on you. That's up to you. People can absolutely do that, Abs. But the smart money, they go and they take the money. And by the way, Abs, I think we just changed Fridays. It's no longer Conspiracy Friday. It's now Church Friday. I guess we're going to mass. On Fridays, boys. But I do want to answer this question, guys. Merlin, you can't right now. It's not an app. We're working on releasing an app, but you can definitely use it on your phone. Just open up your browser and go log in. Just surf the web. Go to merlincrypto.com, and when you log in, you just save it to your home screen. And then bang, it shows up on your phone like an app. You'll have an icon there. You'll see the Merlin icon. And I use it every day, Abs. It's my first thing when I get up out of bed, take my phone, I hit the button, it launches my Merlin app, and I can see what my crypto portfolio is doing right when I roll out of bed. It's my very first thing. And then my second thing is you.
Right.
I do my 10 push-ups that you tell me to do every morning.
Listen,
my 10 push-ups.
I don't want to do this to you, but fake news, my friend. Now,
no,
guys,
I'm not sure. I've been doing my push-ups in the morning.
Guys, I did just want to say, because a lot of people, let's just summarize this as simply as we can. Create a plan. That's it. Just figure out where you want to take profit, even if it's totally arbitrary numbers. Even if you're waiting for $100 XRP, at least have the plan that when it gets to $100, you're going to be taking some profit. That is what will set you apart from the people who win during a bull market and the people who lose during a bull market. Because when crypto's going up, Johnny Crypto, everybody's portfolio is going up at the same time, right? That's an exciting journey. But when crypto is going down, you know whose portfolios aren't going down? The people who took profit at those higher prices. That is all we're advocating for on here on GMC. And we love to talk about using Merlin because I think that's the best strategy. But if you're not confident enough to use Merlin yet, write it on a Post-it note, and eventually you'll get a little more confidence and use our application for free 30 days. Make as much money as you can, guys. Now, we do have a lot of other content prepared for today. We got 23,900 people here. If you're enjoying the show, show us some love, smash that like button. I believe we broke 1,000 likes, so I want to give a massive thank you to every single person who hit the like button. If you appreciate this type of content where we engage with the channel, this is what overtime's all about. And Johnny's the one who kind of led that narrative where he's like, we should take some of that overtime and incorporate it into talking to the live chat. I believe it, guys. So if you have questions, if you have comments, continue to put those in the live chat. We have the best community in all of crypto, and I want to hear from you guys and girls out there. So with that being said, let's talk a little bit about Anthony Pompliano. This is more of a fun video, Johnny. I'm going to go use a quick bathroom break, as I like to say. We're going to come back and have a phenomenal last 20 minutes of the show. Here we go.
Do you secretly love XRP? Because again, in our private conversations, you talk about it very bullishly and how much you really have put most of your assets or intend to in it. And I'm just wondering, what your real view on XRP is. So
should have never asked you this question. Let's ask you this.
Well, look, you asked yesterday, like what you asked your audience on Twitter, like what we're going to talk about. And a lot of the XRP guys came out and they said they really want to talk about it. And they know my opinion on it. I'm in love with XRP. And I think it serves a very useful and important purpose. I just want you on the record saying what you think about XRP.
So, I mean, Brad and I basically talked about it, but if you separate XRP and Ripple has a software company that wants to build better software for banks. No brainer, makes sense. Like venture capital bet. I'm jealous I didn't invest in Ripple in the seed round and make a bunch of money with all the venture capitalists, right? So like that makes no sense. The Ripple XRP relationship, very weird to me. I've been on record a million times in saying like, I don't know what that relationship is or was or whatever. That's not my job. Like it is what it is. And we are here today. I think that XRP in a...
Oh my God, there's a lot of hedging and hemming and hawing.
No, hold on. XRP, well, because you know that, look, the XRP Army, I nod my respect to them. They don't fuck around. So I'm not going to mince words. But no, I think that XRP as a part of the Ripple product, meaning like they use it inside the product, I understand why they do that, and I see the advantages inside the Ripple ecosystem. What I don't understand, and I think where I choose to not engage on the XRP side, is I don't understand why people are buying it, speculating on future price movements.
Really?
Right? Like to me, if Ripple is successful, that doesn't mean that XRP has to be successful. And I think
you're talking about Bitcoin now. You're talking about Bitcoin. You said speculate.
No, of course. Listen,
I mean, none of us know, right? I mean, none of us know.
Absolutely.
But,
Let me just say this, John. 10 seconds, I'll play.
Listen, by the way, Bitcoin for sure, like I've said a million times, it is the most binary thing you could find. It is either going to be worth, millions of dollars a coin, or it's going to be worth basically nothing.
So what's important about that, first of all, he's talking to Michael Arrington, and Michael Arrington watches Good Morning Crypto. He's commented on our posts. He's retweeted some of our shows. He watches Good Morning Crypto. Something important to know about Michael Arrington is he's not a millionaire. He's a billionaire with a B, and he's interested in the ecosystem that XRP is creating. Now, this is an older conversation, and Anthony Pompliano is very pro Bitcoin now. He will not address the XRP army in the same way he did here. But I think it goes to show these Bitcoin guys understand what we figured out a long time ago. The real money here is in utility and problem solving. Bitcoin doesn't provide that. Bitcoin provides a hedge against inflation. Right? That's all it basically provides from my perspective. It's a finite asset. It's going to increase in value against the dollar. What XRP is doing is building a digital economy. And I think Anthony Pompliano kind of explained how he knows that as well. And he knows the XRP community stands alone on a lot of these topics. We are the strongest community in crypto. I genuinely believe that. So shout out to everybody in the live chat who's a part of the XRP community. We're a special group. We are definitely a special group of innovators and positive thinkers here who have found a great idea and are now ready to profit off of that long-term investing strategy. Floor is yours, Johnny, and then we'll continue.
Yeah, I'll tell you what. First of all, Michael is scared to death of the XRP army, and he should be. I mean, the XRP army.
I mean, Anthony.
I mean, Anthony. Sorry, I said Michael. Michael's the Arrington's the other guy. And by the way, kudos to Michael Arrington for watching our show. That's awesome. And you know what? I'd love to have him on our show. If he wants to talk to us, come here, reach out. We'd love to talk to him too. But the thing about that, Abs, is I like how he called Anthony out on that. And Anthony's scared to death of the army, and he's, so he was reserved. Now, but he said something interesting, right? You heard what he said. Massive believer in Ripple. By the way, how old was that article, that interview? Do we know? Was that like
here's the thing. I believe it was 2019. It may have been 2018.
Okay, that's helpful. The context of that helps just to get a sense. So that was not that long after XRP had its massive bull run. If we kind of go back in time, 2017, 2018, where it hit all-time high, you could see the excitement around. But there was not a lot known versus what we know today about XRP and Ripple's potential. So I would love to hear what Pompliano thinks as of today versus, but he probably won't answer the question. Like you said, utility is the key. You're absolutely right. And we just talked about on the show the 4 or 5 different areas that Ripple is leveraging and using in growing their technology as a software company to create use cases to grow the value of XRP. And I think at the end of the day, we've always talked about The value of XRP is going to be driven by the institutional trade volume of what it's needed for on a daily basis. And that's why, to me, if XRP is being used on the RLUSD, that's massive, Abs, because that will be the driving factor. All we care about then is the growth of RLUSD. All right. And then there we go. So I think at the end of the day, there's a lot to be exciting for in XRP. I have heard people in the space, respectable people who understand finance, hedge fund managers, say that the one thing they're worried about in XRP is when they look at it from a blockchain perspective, it doesn't generate value as you're using the token, right? The fees are so tiny. Like the movement of XRP is like 0.00.
But I actually have a solution for this, which
Well,
is
but anyway, and I want you to bring that. But I'm just telling you what I've heard is people have used that as an argument to say, well, it's not going to generate value there. So where's the value going to come from? Now, I've told you where I think the value is going to come from. It's going to come from the use, the daily transactional trade volume, which I believe exactly XRP will be the fuel for RLUSD. I think that's the most brilliant thing Ripple could have done, was to launch an RLUSD, use XRP on it, and then they drive the volume themselves. Freaking brilliant. Sorry, Abs, go ahead. Go with your...
No, I think you're right. And Austin King explained how that is an issue that people are thinking about behind the scenes. And the solution to that is a tokenization fee. So Ripple's business model is they're going to charge a certain fee to tokenize assets on the ledger, driving a new set of revenue into the blockchain. So again, you're valid, Johnny. And these conversations have logical answers to them, which I think is so important, right? We don't have to sit here and say, oh, that doesn't matter. It does matter. And they provided a solution, which is a tokenization fee, which is great. Now, this is something else I wanted to talk about during today, guys. We got 25,000 people here. If you're enjoying the show, smash that like button. It's a very simple and free way to help out the Good Morning Crypto show. Here's some breaking news we got yesterday. Michael Saylor was on the cover of Forbes, and the actual article was titled "The Bitcoin Alchemist." Now, this was a little bit nervous, and people were speculating that this was a sign of the top for the crypto market, because we've seen several other times, including Sam Bankman-Fried, who everyone recognizes, be on the cover of Forbes before the eventual collapse. Now, I just wanted to give Johnny some thoughts here. You're not a conspiracy guy, so let's take a rational approach. Is there any validity to this? Is this a positive thing? Is this a negative thing? What does this mean to you?
To me, Abs, we are so early in the adoption and development and innovation phase of crypto, with Trump now as our new leader in the pro crypto administration he's driving, and none of this crap means anything to me. You know, all of Kramer coming out yesterday saying you got to buy Bitcoin. Everybody thought that was the top. Forbes coming out, putting him on top. Everybody thinks the top. No, I don't think we're anywhere near the top. I think we're in for a massive 4 years of growth. I don't know what that's going to look like over 4 years. We are going to have ups. We are going to have downs. But I personally believe, I ignore all this outside stuff. I could care less about whether he's on Forbes. And yes, maybe that means we're going to get a short pullback. But do I think overall the trend is going to look like this for the next 4 years? Absolutely. Are we going to have some ups above it and downs below it? Absolutely. Could this mark one of the downs? Maybe. I don't care. I'm not playing it that short term where it matters to me, because of my investment strategy where I'm a long-term holder and I know we're going this way. You know, 2028, whole different story. I'll feel different. But I feel the next 4 years, we're creating the baby. You know, we're turning the infant into an adult. There is a lot of growth that's coming, and it's not here yet. There's a lot of money coming into this space. It's not here yet. There's a lot of utilization that's coming in the space. It's not here yet. So I could care less about Kramer, could care less about Forbes. Doesn't matter. I ignore all that stuff, but you bring a valid point. Does it mark the top? In my opinion, absolutely not. I don't think so. And I would encourage our audience, our group, ignore those kinds of things. Unless if you're like day trading this thing, then you could use whatever you need to use to do. But I'm not playing it from that perspective. Does that make sense?
Agreed. Neither am I, Johnny Crypto. And what I'd like to play next is a video of the chairman of the Federal Reserve, Jerome Powell, talking about how banks now have the ability to custody crypto clients. I'm not going to play the whole video. First 20 seconds. Here we go.
You know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks, right, that we regulate and supervise, do that. You know, the threshold has been a little higher for banks that is safe and sound activity. So we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision.
So what he should have done is he should have saved the time, Johnny. He should have just waved the white flag right at the podium. He should have just said, guys, we lost. It's over. We surrender. Crypto is here to stay. Flourish.
I was just going to say, you want to talk about adding a rat, snake, weasel, another guy to the rat, snake, weasel meter. This guy came from another WWE heel flip turn right there. Another Larry Fink, another Jimmy Dye, right? He came from hated this space. We're absolutely not doing it. We're not touching it. It's no good. It's bad. We got to slow it down. We got to understand it. Blah, 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 blah. Not going to do nothing. Banks won't even take. I'm a software company. Merlin's a software company. And the banks that he regulates turned us down because our product serves. We're not crypto. We serve the crypto industry and we got shut down. What does that tell you? Right. And now he's, oh, yeah, banks. Yeah, sure. They can service this market. We're all for it. Massive WWE heel flip. Good for us at the end of the day. It's totally great for us. It's then they join you stage. The then they fight you stage is over because everybody knows Trump. And you heard it in one of the interviews you played earlier in the show. And I got to go soon. But you did mention in the show earlier, somebody had said we now have a pro crypto. Oh, they said it comes from the top. Yeah, no shit. Been saying that on the show for 4 years. There's a reason why Gary Gensler was bad. Not because he was bad, because the Biden administration told him he needed to be anti-crypto, and he did it. And now you're hearing at the top, the Trump administration is saying you need to be pro-crypto, and everybody's going to be pro-crypto. And that's a fantastic thing for every single one of us in this group chat. You should all be super happy, super excited, because there is nothing but big things and big money to come in this space, my friend.
Guys, we're going to close out today's episode with a fun conversation. We got 25,400 people here. If you enjoyed today's program, show us some love. Smash that like button. Johnny, I do just want to give a quick thank you to all of my subscribers to the Twitter channel. This is something that I'm going to be increasing the content on. We started in DC. We've been pumping it out all throughout the week. Now, what's so important about this, guys, is that a lot of the information I want to provide, I will provide here through the subs. The most important thing I'd like to say is this, Johnny. As we go into alt season in the spring of 2025, projects like Hedera, Cardano, Chainlink, AVAX, and XRP, these are the projects I'm anticipating will break all-time high. And I shared this chart with the subs earlier today. I'll just talk about it for once again, just a moment here. This clearly shows where the alt season is supposed to take place. And we saw it in 2017. We saw it in the spring of 2021. And we're most likely going to see it here in the spring of 2025. Now, why is this important? Because remember, look at where the chart goes. And look what follows. We're going to pump. We're going to become overvalued. We're going to go into a multi-year bear market if things continue how they have. Does that mean projects like XRP may sustain their value? Maybe XRP goes to $27, Johnny, during the bull run, and then comes all the way back to $5 to $8 during a bear market. That is still a huge success, right? That is a massive win, but it gives our listeners a chance to take profit at those higher price targets. And that is why we're constantly focused on creating a plan.
I'm so glad you showed this, Abs. We definitely got to talk about. Look at this chart, guys. Where's the overall trend? Look at the yellow line, guys. It's going up. But look how far above, and that line should be, more in the middle of the chart. But you go above it, you go below it. And this is why when people say, well, I'm not selling. Okay, don't sell. But man, look at those peaks. If you sold halfway up the peak in 2017, and again, halfway up the peak in 2021, Abs, you'd have a lot more money today than you would have had if you just held for the long run and wait for it to get to whatever target you want it to get to when you sell. I hope people understand what I just said, and this chart literally shows that. This is why you want an exit plan, because things don't go all the way up, guys. They go up really fast. There it is, and you have a chance to take some profit, because when it comes down, now you're sitting there going, son of a bitch, I should have listened to Johnny and Abs. They told me I should have had an exit plan. I should have been on selling this way up, but I didn't want to because I was waiting for $10,000 or $100 or $589, whatever number you're waiting for. And all you did was lose an opportunity to put more money in your pocket on the way up so that you could have been buying when it comes back down. Because even though Trump is going to be pro-crypto, he's going to drive everything up, charts are still going to look like this. They're going to go up. They're going to go down. They're going to go up. It's going to trend up, just like you see, but it's not going to be just up. The only chart that goes up, Abs, there's only one chart in the history of your lifetime of mine that goes up. And it was Bernie Madoff's chart because it was a fake scam. And that's the only thing that goes always up and never down. And we don't live in that real world. This is what we live in right here, guys. We hope you understand and why you should. We encourage you, write it down on a piece of paper, or we made a tool. We made it easy for you. Merlin, 30 days free. Sign up, click on the link below. You get 30 days for free to try it out. Yes, you got to put your credit card in, but it's okay. We don't charge it. And you can cancel right in the app if you don't want to. So you're never going to get charged. And you get to capitalize on those events and make more money because Ab said, why do we do this show? It's so you guys can make money. And now we made a tool. Now we make a show for you. We made a tool for you to do it. And by the way, we're always trying. We will only promote things we do. So go follow my man Abs on Twitter. Sign up for a subscription. Help him out so we could do this full time for you guys for free. Sign up for Merlin so I can hopefully get free. And we could, again, do this full time for you guys all time. That's our goal.
Completely agree with you, Johnny. And I want to just say one more thing about the subscribers, guys. It is less than a cup of coffee per month. And what the goal here is that if we can just make a little bit more income, we can increase the hours that we put into this show and we can create a better product for you. So it all comes back to the listeners here. I want to give a massive thank you. We've got 25,800 people, over 1,225 on YouTube. If you enjoyed today's show, smash that like button. Now, Johnny, what I do think will be fun to kind of close it out on is that video that we started with today where XRP was being discussed by inside sources for the Federal Reserve. And it's not the XRP army who's reporting this, right? It is the actual crypto people who have been connected to Bitcoin, Solana, Ethereum, and they're like, oh my God, we now have to report the XRP story we never wanted to talk about. I'm just going to do one quick video. This is just 40 seconds of the White House crypto czar, and then we'll close out the episode with that. But this is the executive order and why it's important. Here we go.
President Trump signing an executive order promoting cryptocurrencies while paving the way for a national cryptocurrency stockpile and banning central bank digital currencies. Trump's crypto czar, David Sachs, is applauding the move. Have a listen.
He's directed our working group to produce a regulatory framework that's going to encourage innovation in crypto in the United States, keeping the industry onshore rather than driving it offshore, which is what was happening under the Biden administration. We want that innovation happening here in the United States, and I think it now will happen in the United States because President Trump has declared that the U.S. must be the crypto capital of the world.
You heard it right there, Johnny Crypto. And if we're going to become the crypto capital of the world, it means we're going to have pro-crypto policies that outperform other countries. And we don't have the time, but that's why I've been talking about the removal of capital gains tax. We don't sell hopium on this channel. We sell optimism, right? And there's a difference. One of those is based in reality. And so I do believe that these conversations are being had behind the scenes. And when guys like David Sachs, who are very knowledgeable about the XRP token, now have a position of power to kind of define regulation as well as utility, we have every reason in the world to celebrate. So just to close out, any comments there, then we'll close it out with a new video about the inside sources.
Oh my God, massive comment to Abs. I mean, he literally just told you why I'm excited. He literally told you, President Trump said, we have to be the crypto capital of the world. Do you need anything? When a man like Trump is telling his people, yeah, that's it, drop that mic. Drop that so I'm going to smash the like button. When President Trump tells his people, you will go make us the capital of the world, everybody's shaking in their boots to go figure out how we're going to do it. And Sachs is Sachs is going to go do it. He's a successful billionaire, and he's going to make it happen with his crypto working group that he just talked about, that is supposed to come out and provide regulatory framework for this space to happen because the smart guys understand it. Trump gets it. Sachs gets it. The only way anybody can play and foster innovation in our country is to create the framework so the money can come in. And that's what they're doing. And that's what we need to be excited about. And that's what should have happened 4 years ago. The U.S. lost 4 years. For all you folks, I'm not going to say it. It's not point. Point doesn't matter. It's irrelevant at this point. But I will say this. We lost 4 years. Elections have consequences. And Biden's administration cost the U.S. 4 years of massive innovation and jobs. They're all sitting there right now in Hong Kong and Saudi Arabia, Dubai and other areas because that former administration chose not to do it. Here's the good news. The new administration is going to move fast. And you even heard Sachs say, Abs, that we're going to catch up quickly. And because Trump is telling them, you guys are going to make this happen. And so I can't tell you how excited I am for the next 4 years. It's going to be amazing.
It's going to be exciting, guys. Be sure, vote in the user poll if you haven't yet. We're going to play that video. We're going to comment on it one last time. 26,000 people here. Let us know what you think in the live chat. I'll leave the XRP chart up in the background. We'll leave some of the daily movers, actually. But here is Scott Melker confirming what we've talked about for a long time on our channel. Inside sources are reporting that XRP is being considered for a U.S. digital asset reserve. It is the only other asset besides Bitcoin being considered. We're going to talk about this after we play it. Here we go.
Digital asset stockpile rather than strategic reserve. I happen to be in some chats and obviously have my eyes and ears on the ground. And I heard people saying things, some Bitcoiners saying certain things on Twitter that were not factual from the chats. And what was happening behind the surface was that it was very clear that XRP was being considered and they were freaking out. Right. And so I actually shared that. And I think I started this madness, whether intentionally or not. But I shared a tweet saying, hey, don't shoot the messenger. But I can tell you that XRP is being strongly considered for the strategic reserve. Factually, right? And I'm not going to divulge my sources, but and that's what kind of sparked the Jack Mallers emergency, press conference in the Dave Portnoy style, and sort of the major panic here. But I think it's very clear, and so I think we're just seeing that very, very clearly. Do I believe XRP will necessarily become a reserve asset? I don't know. If you look at many people's interpretation of digital asset stockpile was to take the same approach as they're taking potentially with the Silk Road and Bitfinex. To my knowledge, the United States in all these criminal cases has not actually taken much XRP, so they would have to buy it, right? So when you talk to people about this strategic stockpile, I think symbolically it's more likely the United States government, as we said, holds what they have. And that starts the game theory of other countries having to stockpile these assets. Right now, they don't have XRP. So it will take a pretty aggressive lobby, I think, from XRP to have the United States actually purchase it. Because I would handicap personally us having some sort of stockpile at 95% because we already are holding the assets. I would put it sub 10% that the United States starts buying any digital assets.
A lot was said there, Johnny. I'm just going to give you a chance to respond, and then we'll discuss it to close it out today.
Well, I mean, Melker definitely started it. He started this whole mess, no doubt about it. But I don't care. I'm glad he did, because what he did was he revealed to us what his sources are telling him. And if he's afraid, a guy like Melker is connected apps, and if he's hearing it, then it's probably the discussions are happening. I'm pretty confident they're talking about it. Now, the question is, what's it going to take? Who's going to lobby for it and all that? But I'll tell you what, if there was any company I would bet on to make it happen, it would be the smoothest CEO on the planet, Brad Garlinghouse and Ripple. So I think we're going to see that happening.
Absolutely, guys. And remember, the lawsuit is still ongoing, but the reality is it's irrelevant. And Stuart Alderati said it. It's like white noise from this point forward. It's really not going to impact Ripple's adoption. It's not going to impact the price XRP. It's not going to, stop the XRP community from doing anything like we've had to overcome in the past. Now, Poncho commented, yeah, Abs, make the show a 2-hour show from now on, then do overtime. I don't know if I have that much to say, guys. I mean, I could keep going. We could do another 12-hour daily program, but I'll need some more $5 subscriptions for that to happen. Now, we got 26,000 people here. If you enjoyed today's show, we love you guys.
I think we spoiled everybody. I don't think they realize we both have day jobs, right? We're doing this on the side. They don't understand we aren't free yet. But you know what? Follow our Twitter accounts. Go to follow Abs. Follow mine. Get Merlin. Be a subscriber. Help us out so we can get to do this more often. And who knows? Maybe someday down the road, maybe you'll see us. Maybe there'll be we could do another show. Who knows? I guess, we'll have to. I wouldn't rule out a possibility, but we're going to need you guys to smash those like button, follow. That's right. Help me get to 11K. Help Abs get more subscribers. The more you help.
Well, we should say thank you guys, because we actually had the goal a couple of weeks ago before we went to DC. Johnny was at about 9,600 followers. We made 2 statements on this show. We have the best community in all of crypto. We broke that 10,000 like mark within just like 48 hours, 72 hours, Johnny Crypto. So huge thank you to everybody who appreciates this show, who watches this show, who enjoys us, and who laughs with us every day, because I think we're probably one of the funniest crypto shows on all the interwebs, guys. Now, with that being said, let's talk about the user poll that we ran today, and this is an interesting one, guys. The question that we asked our live chat here Oh, maybe I didn't copy and paste it. Give me one moment. Let me just do this live on air. Here we go. So does XRP pass all-time high price of $3.84 this February? 89% said yes. 11% said no. Now, believe it or not, 11% is not some small number, Johnny Crypto. 2,200 votes. That means about 450 people said they don't think we're passing all-time high in February. So let me just say, I believe we do, right? From a TA perspective, from a catalyst perspective, there's so much positive energy in the XRP community. I think $3.84, that's light work, as the kids say, for the XRP community. So any thoughts, Johnny? And then we'll close.
Well, I mean, it's not inconceivable. I think we are going to get a big pump in February, and XRP is so close. It would be hard to not be in the 90% camp. 10%, 200 people think it's not going to happen. Well, that's okay. That's I would say I'm actually not surprised that a good chunk of it feels that way. What I would say that if you had asked that question 2 months ago, you would have seen a very, very, very different answer for sure. But I think it's so funny that, boy, what a swing. 90%. That's compelling. A lot of people believe we're going to get there. I think if crypto's going to do what it historically does in November, we will have a new all-time high for XRP by the end of February, my friend.
Absolutely, guys. We got 1,000 people watching on YouTube. If you enjoyed today's show, show us some love. Smash that like button. I want to give a massive thank you to everybody who commented, watches, hits the like button today. We love and appreciate you guys. Now, it is the weekend episode, so like we always say, go out, hug some family, touch some grass, enjoy some sunshine this weekend. The crypto world will be back on Monday, and we're going to be talking to you guys in only 72 hours. Next week, we are going to be traveling to Arizona, so I did just want to throw that little caveat in there. Thursday and Friday will be unique situations. Maybe we won't have a show those days. So just in case we don't, we'll talk about it next week as well. I just wanted to put that little preface in here today. And if you guys enjoyed this program, hit the like button, guys. We love and appreciate you. This is our most fun part of the day. Now, Johnny, we're going to close it out with a little bit of fun, exciting content. You may even get tired of winning, guys. That's been the theme of 2025.
I'm going to be so proud of your president, and I don't care about that. But you are going to be so proud of your country because we're going to turn it around and we're going to start winning again. We're going to win so much. We're going to win at every level. We're going to win economically. We're going to win with the economy. We're going to win with military. We're going to win with healthcare and for our veterans. We're going to win with every single facet. We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. See, the bottom line is...
Whether you're taking pre-sales for a new book, running a crowdfunding campaign, or selling at an in-person event,
this issue so we know who worked with Jeffrey Epstein in building these sex trafficking rings.
Absolutely, Senator. Child sex trafficking has no place in the United States of America, and I will do everything, if confirmed as FBI director, to make sure the American public knows the full weight of what happened in the past and how we are going to countermand missing children and exploited children going forward.
Thank you for that. I do want to touch on the political persecution. I find it so interesting that they feel like you would carry out political persecution. Your parents are with us today. They fled Uganda and persecution from Idi Amin. And I think that with your background and given your family's history, that you would never move to political persecution. Is that accurate?
Yes, Senator, that is.
And we appreciate that you would remove any kind of two tiers of justice from the FBI because they have practiced that every day for years. Not all FBI agents. There are some good ones. And we certainly want to keep them, but the politics has got to be moved out of the agency. Now, they've tried to frame you as being anti-police. We've discussed that some today. And I know that you grew up working with NYPD officers in your community. And I know that law enforcement groups, including the National Association of Police Organizations, have endorsed your nomination. And on top of that, your brother is a law enforcement officer. Is that accurate?
Many of my family are, yes, Senator.
How many of your family, sir?
Well, I guess the Indians have a different definition of family. We got a really big one, and they're all family.
We all love big families.
So we got a lot.
I appreciate that. But it is accurate to say that in your role, you're going to do everything that you possibly can to protect the men and women who are protecting our communities.
That is of the utmost importance.
Thank you. I want to go to the Nunes memo. You were the principal author of the Nunes memo. Is that accurate?
Yes, me and staff.
Thank you. And that did really so much to focus the light on the Russiagate hoax and the political cabal that was for years operated out of the DOJ and the FBI. And I know that there are some that felt like that memo was not accurate. We know now differently. And I'm quoting a comment that was made about that memo and by a
This week, a judge stopped that freeze. And according to the White House, they will continue to pursue that program. Congresswoman, it seemed to light a fire under Hakeem Jeffries, who prompted an emergency caucus meeting for House Democrats to talk about a three-pronged plan, reports said, about how to push back on this. Do you have a plan?
Well, absolutely. And I think you saw the first part of that, as Leader Jeffrey said, round one, which prevented the administration's plans from going into place. Congress appropriated these dollars. We approved these dollars to programs across the country. And it's Congress's role to decide where our taxpayer dollars go. So the president cannot be in a position where he thinks he unilaterally can decide to prevent those dollars from going out. He really was trying to put in place a one-man shutdown of our government. There were broad implications of what it meant. I heard from constituents all over huge concerns about resources that people were depending on being cut off, on health care, support for our community members. There's incredible concern, but this is Congress's decision. The president doesn't have the right to withhold those funds.
Well, and as we talk about Hakeem Jeffries and his leadership in the House, Congresswoman, there's also a question of leadership in the party as a whole. Tomorrow, a new DNC chair will be selected. It's happening not very far from where Joe and I are now at the National Harbor in Maryland. Is there someone you would like to see in that role, to work with in that role as head of DCCC? And is that person now going to be the leader of the party?
Well, there's great candidates running, so that will be a decision that's made by all the folks who are voting in that election. But definitely the DNC is an important partner. Our role and my role is to make sure that we take back the majority in the House. Very critically important, so that we have folks who are going to stand up for American families, stand up to make sure that we are focused on lowering costs and addressing the issues that our communities are seeing, and stand up to an administration that actually feels like they don't have to work for Congress. We're a co-equal branch, and it's important for us to continue to speak loudly about the important role that Congress plays in supporting the needs of the American people. So there will be an election tomorrow. We'll see. Look forward to working with whoever.
So machine learning and AI has taken over different aspects of our lives. And so machine So machine learning and AI has taken over different aspects of our lives, and it has also taken influence in many decision-making fields, including trading and investing. So today what we're going to do is we are going to discuss about neural networks trading and how we can create efficient strategies like this, which can beat the S&P 500 buy and hold returns, and pretty much create your own strategies using neural networks trading, or even improve on your existing strategies by adding a little bit of machine learning and AI. So let's start with what a neural networks trading is. So before that, this is our third video in this series in our YouTube channel. So a few weeks ago, we discussed about decision tree models. And then a few months ago, we discussed about the regression as well. So this is kind of complicated. That's why I kind of delayed it this much. Because neural networks is kind of a complicated aspect for anybody to understand and learn. So I'll try to make it as simple as possible so you guys can understand it. So neural network is just like the way your brain functions. So it's like your brain has got neurons. So when you see a number like 3, the brain looks at the number 3, identifies the curves and everything, passes on the signals, and makes a decision saying that, hey, it's 3. So that's pretty much what neural networks does, the machine learning model does. So when you get an image of a cat, the neural networks can identify that it's a cat through different kind of training regimes. So there are different kinds of neural networks. So the most basic one is a feed-forward neural network. So that's used for like image classification. So let's do this example here. So let's assume that you feed in an image of a cat, and what happens is that there is the input layer, which is the cat picture, and then there are like hidden layers, and each hidden layer will have certain information, certain weights added to it. So that weights will be initially set as kind of like random weights, and then it will identify it as something. So let's assume that the initial identification is like a cheetah. So obviously there's an error because this is not a cheetah, this is a cat. So it creates kind of like an error term like I, and then it goes back into that weight area, and then it kind of adjusts the weight. So the different weights, the weights here, the weights there, so the weights everywhere, and each weight is going to adjust, and then it's going to go forward again, and then find out whether it's a cat or a mouse or a cheetah. And again, if there's another error, then again it creates a new error, and then again it goes back and does the whole process over and over again, unless and until it finally gets the fact that it's a cat. And then you've got really a neural network model here. So what I just said right now is basically a simple example of a feed-forward neural network. So the initial things here, those are the input layers. So I'm just going to mark it as I, and then this is the hidden layer, and then finally that is the output layer here. So you've got the input layer, hidden layer, and output layer. So you know the number of times this process goes over and over again. That's called iterations, or in other words, epochs. So in this example, we have just taken a cat and then a picture of a cat and finally concluded that, hey, this is a cat, and this whole model is called feed-forward neural network. Now, on the other hand, in case of recurrent neural network, we've got a different thing. So this one doesn't have a memory. So once the model is created, it kind of identifies that a cat as a cat. So on the other hand, when it comes to stocks, or like, for example, predicting the next word, you have essentially what is called recurrent neural networks. So recurrent neural networks' fundamental advantage is that it's got a memory advantage. It can remember things. So for example, it's used in a sequence of data, like for example, stock data. So it has got prices of yesterday, day before yesterday, and all those things. So you've got like a sequence or like a sentence, like I like to drink coffee. So we can use that to predict the word here, coffee. I like to drink coffee. So the thing that we said, when I go back from the cat after the error and check back the weights, that's called back propagation. And then after that, when it goes forward, it is called the forward propagation. So there's I've created a simple picture here, got it online. So here you can see the back propagation. So first, initially it goes to the input units and it adjusts the weights of the hidden layers. These are the hidden layers, hidden units 1 and hidden units 2. So here we've actually created a simple one with just one hidden layer. And here you can see there are multiple hidden layers. There's like 2 hidden layers, and finally creates the output. And then the output goes back to create the error term and then adjust the weight from the hidden and the inputs, and then it goes back again. So that's called back propagation and forward pass. So the fundamental difference between recurrent neural network and the normal feed-forward neural network, it's got back propagation not only through the hidden layers, but it's called back propagation through time. So that's through the hidden states. So it's got like a sequential time step. So let's take this example of I like to drink coffee. So in time t1, the first word you get is I, and there's no previous hidden state, and the current hidden state, then there's a new hidden state created, and that's h1. And then during the next time step, you have got the word like, and you've got the previous hidden state h1, and then you've got a current hidden state h2. So it has got information from the previous hidden state as well. So that's how it has got memory. And then in time t3, we've got 2. And then it got the previous hidden state of h2, and then it got a new current hidden state of h3. So again, it is carrying over that memory, which the previous situation of a cat didn't have. So in this case, because of the back propagation through time, the recurrent neural network has got an advantage, and that is the whole idea of memory advantage. And finally, in t5, we don't have any more input word, and we've got the hidden state of the previous one, h4, and based on that h4's data, we make a prediction that it is coffee. So just like the prediction is done for coffee, you can actually use it to predict the stock price data. So instead of T1, I like to drink, it can be price of yesterday, price of day before yesterday, and things like that. And you can use different kinds of input. Instead of the price, you can use the RSI, you can use the volume, and you can use the target as the 5th day return. So here's like 1, 2, 3, 4, it's like the 5th word, right? So instead of the 5th word, you can actually use the target return as the 5th day's return. So I've given like a trading example here. So here we've got the time T1, T2, T3, T4, T5. So input, we've given the price of the first day and the RSI of the first day, and the price of the second day and RSI of the second day. So each time in the hidden state, the memory is being stored and the new information is carried over, and that helps us to predict certain things in the stock market. We can predict whether the market is going to be a positive or a negative by using all the RSI data and the price data of the past. So the recurrent neural network or fundamental neural network has got certain problems. The fundamental problem is that it's got a computational issue. So we need lots of computational power, unlike decision tree or regression where we can actually create. So in our strategy, we actually use QuantConnect, and they don't use GPUs, they use CPUs, and still we were able to create one. But when we go to more complex one like LSTM, it takes a long time to test it. So even in QuantConnect, I've seen like 15, 20, 30 minutes for it to actually load up. And there's a time after a certain time, it kind of shuts down because, you know, it's too much load for the computer to actually run the strategy. But even then, QuantConnect is pretty good in executing these machine learning models. But in future, what is going to happen is that you're going to have GPUs and everything to make the models even more powerful. So in this specific strategy, we created a 64 as the memory vector. So we can also decide on how much the memory vectors are. So we can create more complicated memory vectors, like from 64 to 128 to 256. So in the strategy, we use 64. So it's much more faster to train the model. And then we can do lots of kind of hyperparameter tuning. We can change the input features. We can change the epochs, that's the number of iterations that the model used to train. You can use the hidden vector size, that's what I've said here. And you can also adjust things like learning rate. So these are all like more complicated hyperparameter tuning, which I'm not going to explain it here, but I have explained it thoroughly in our course. So this basically is covered in our machine learning and AI course, including this strategy. So we've actually got 8 machine learning and AI strategies. We have also got combined machine learning strategies where we combine recurrent neural network with that of regression and things like that. So that's give us a fundamentally better edge. So we've used AI in even portfolio rebalancing, also in combining multiple models. And after each section, each model that we discuss, basically we've discussed 5 models here. We've discussed regression, decision tree, support vector machines, recurrent neural networks, and long short-term memory. And after each of these sections, we've got a strategy. And after each strategy, we've got a quiz as well. So a quiz would be something like this. So for example, this is a recurrent neural network quiz. So these quizzes are created so that you understood what's being explained, so that you can create your own recurrent neural network strategy. And you'll have the strategy code and the lecture and all those things. So we've also got different kind of strategies as well. All these strategies has beaten the SPX CAGR to maximum drawdown ratio. That's what we are aiming for in our course, or any strategy. When you create the fundamental comparison measure is the SPX CAGR to maximum drawdown ratio. So we also discussed the applied Markowitz portfolio optimization to AI as well. So coming back to this lecture, so one of the advantages of the neural networks, we can apply it anywhere. So imagine you have like a strategy which is performing well. You can actually make it perform even better or reduce the drawdowns and things like that using neural networks. So going back to the recurrent neural network, RNN has got a fundamental problem, and that is the vanishing gradient problem. So it tends to forget stuff that is kind of like in the past. So for example, when you read a book, let's say you're reading Stephen King's The Stand, which is like really, really big. So you tend to forget some of the characters because there are lots of characters. So just like human beings, we forget stuff. So the neural networks also tends to forget stuff, and that's because of the backpropagation errors and the weights and things like that. So in order to avoid the situation, LSTM has got a thing called forget gate. So along with the hidden units, there will be a forget gate which kind of takes care of the problem of the things that they forget, and it will take into consideration the important things in the past that has to be remembered. So that helps us improve our result for the LSTM. But the problem with LSTM fundamentally is that it is extremely computationally intensive, that it will take a while to backtest this strategy in LSTM. So let me get the LSTM strategy here. This is a strategy we did for the LSTM. We've done the portfolio optimization, rebalancing using the LSTM machine learning model AI. So these machine learning model AIs, like neural networks, not only for you to create efficient strategies, it can also be to rebalance a portfolio. So imagine you have like a value investing portfolio and you need to adjust the allocation of the portfolio. So you can use the machine learning model to actually allocate how much money do I need to allocate to SHY, how much money do I need to allocate to GLD, SPY, or TLT, and get superior returns while minimizing the drawdown. So these are some of the things that machine learning models like RNN, LSTM, and many other things can use. It's just not for entry or exit conditions. It can be to improve your existing basic quant trading strategies. it can also be to rebalance a portfolio. So now let's go back and discuss the code of the recurrent neural network. Okay, so as you can see, so I have imported the libraries NumPy and scikit-learn. So there is a fundamental Python library for neural networks in LSTM. For this specific strategy, for the RNN, what I did is that I actually created the equations myself so that you guys can understand how the process is done and if you want to make any changes. The advantage of having libraries is sometimes it can be, you don't know what's happening inside. But it is easy to use. You just have to import the libraries and actually run it. But sometimes it's also good to know what happens inside of it. So I actually created the code myself for the recurrent neural network. So you've got the start date and end date. So that'll be our testing data. I've set the cache. I've taken values of RSI, MA, and the 200. So if you don't know anything about QuantConnect or Python, I think the first thing you could do is visit our YouTube channel and go through algorithmic trading in Python 0 to hero. And once you're done with that, you can actually visit our QuantConnect full tutorial as well. So you kind of up to speed on how to handle Python. And then you can come here and it'll be easy for you to understand. So these are kind of like the prerequisites that you will need to understand a certain level of Python so you understand what the code does. We're warming up the data. So it warms up 200 days. And then we are looking into the parameters. We are looking into how many days we need to look back. So remember we did T1, T2, T3, T4, and T5. So that could be like 5 look back periods. So in this case, we're doing 10 look back periods. We are doing a feature count. So that could be anything. It could be a price change. It could be an overnight gap. It could be a volume change. It could be an RSI. It could be anything. So it's kind of up to you on what to choose the input features are. We're not going to show the input features that we have and the entry or exit conditions that we have. But for the people who have done the course, you have access to that specific thing. So you've got the hidden size. So remember I said the 64, 128, 128 the vector sizes, the memory vector. So that's kind of dictated here. Then the learning rate is dictated. And then initially the prediction is set as 0 because that's what we're going to find the value. Is the prediction going to be positive or negative to go long or short? We've used the standard scaler to scale our numbers. So people who don't know standard scaler. So basically when you get different data, so for example, RSI can give you a certain number, but volume can give you like 100,000. So the RSI might be like 30 or something. So you see all these complete variations of these numbers. So in order to make those numbers kind of be comparative, that's why we use standard scaler. So standard scaler helps us convert these numbers to analytical ones so that there is no massive discrepancy because a bigger number can affect the model completely. So we don't want that kind of a situation. The volume might take over instead of the RSI number. So in order to do that is why we use standard scaler. And then we're going to use initialize RNN function, which is something that I created, and also the train RNN function. So the initial ones are the ones that we decide on the weights, and then we also decide the biases. So initially, as I said before, the weights, I think I did said before. So initially the weights are set as random. The first time it goes, and then when you get the error, then the weights are adjusted accordingly. So in this case, we've actually set up the random function and created the weights, and also we created the bias, and then finally we train the model. For training, we are using 2000 to 2009. So I've discussed this in our previous videos about training and testing data. So we're using training data from 2000 to 2009, and we are testing it on 2010 to 2024. You can change this. You can update it as you keep on going. You can actually do it from, I don't know, 1990 to 2000, and then train that on, test that on 2000, 2010 instead as well. And then we're going to get an array which stores the features and the targets. And the features are going to be got from our get features from history, where we can feed in the input features, whatever input features you want. And then obviously there is a target. And then obviously we're going to scale off it the features, and then we're going to transform the features. And here is the epochs, so the iterations, the amount of iterations. So I can increase these iterations to higher number, but again, it is going to come with a higher computational power. And sometimes QuantConnect might not be able to handle it if you give in like too many epochs. And then we're going to find the epoch losses and all those things. And here is the forward propagation and also the backward propagation as well. So here you can see we have used the self.backward function here to find out the epoch loss and the hidden states and target and the prediction. And then here is the forward propagation. We've got the hidden states here. It's an empty array. And then we append the hidden states. We add up the hidden states. And we can see here we have actually put in the weights and also the biases. And we are going to return Y and also the hidden states as well. And then with that information of the hidden states and the Y and Y underscore predict is the value that we are trying to predict, we feed in the weights and then we do the backward propagation and we get the biases and weights, and then we keep on updating it because it has gone through different kinds of epochs, right? So we've got the learning rate, again, it's being adjusted. So finally we have got the complete model of the backward propagation. So we've got the backward propagation and we've got the forward propagation, and it's being trained. And then comes the def on data, which I'm not going to go too far because that's basically the entry and exit conditions and also the get features, the input features as well. So those are available for our members and they can access it in their specific strategy code section. Let's go through the results of this.
No matter what kind of work your team does, Asana can help manage it. From project intake to campaign management to strategic planning and more, Asana works for you. Try it for free today at asana.com.
And see how it has performed. Okay, so we have actually included the commissions as well. So all our strategies comes with commissions included. So let's go to strategies. Strategies performed on the SPY, as you know, as you've seen it in the codes. So we've got a compounding annual return of 9% with a drawdown of 18%. So let's do the calculation. So the S&P 500 CAGR to drawdown ratio. So CAGR is 10. And we are dividing it by the drawdown, maximum drawdown, which happened in the 2008 financial crisis. That's 55. So we've got a ratio of 0.18. So unless we've got a strategy which is above that, we can't go ahead in executing that strategy. So in this case, it's 9% divided by 18.3. So we've got a ratio of 0.49, which is pretty impressive. So the S&P 500 buy and hold CAGR to drawdown was 0.18. So the advantage of this is we can apply a little bit of leverage. You can apply like a 2:1 leverage and get like an 18% CAGR, and still the drawdown will be just like 36% or something like that. Still, it won't beat the maximum drawdown of an S&P 500 buy and hold. So there are lots of things we can adjust to it in these numbers, and we can make the strategy improve by adjusting the epochs or adjusting the input features or changing the input features or adjusting the hidden size and things like that. So there are lots of things that we can play around with in the input features or the hyperparameter tuning, which we have explained thoroughly in the course. And that is one of the challenges that you have. Like, we give you a condition, these are things that you have to change, and these are the things that you can improve the strategy. So this is the RNN strategy, and you can actually improve the strategy as well by combining it with different models. So let me go through some of the performance of our machine learning strategy of that training data. So I can see different models here. So S&P 500 ratio 0.18. So our linear regression model has 0.32, decision tree 0.45, support vector machine 0.44, recurrent neural work 0.49. There's a combined model of 0.39. There is the combined AI model of 0.45. There's another decision tree of 0.1. I think I haven't put in the LSTM, so I think it might be there below here. Long short-term memory. There you go. That's a long short-term memory. That also has done spectacularly well. Then we have got the RNN regression, which is combining the RNN and the regression. We've also got the RNN plus support vector machines as well. So there's lots of growth prospects when it comes to application of machine learning and AI to trading. And these are just the fundamentals. We are just taking baby steps. So I think within like a 2 to 3 years time frame, people will be discussing more about what kind of machine learning models to apply for a specific trading strategy. Can we apply it on a momentum trading strategy? How can we change the portfolio? How can we create multiple strategies using neural networks? Can we apply neural networks on multiple quantitative trading strategies to rebalance the portfolio? So the amount of growth prospects for this is very huge. So hope you guys enjoyed the video. Let me know you understood everything. Let me know if you have any confusion in any of these things. I'll be happy to help you. Thanks for watching. Bye-bye.
Welcome to Sauna House, a sustainable bathhouse where everyone's invited. With sauna and cold plunge, we offer access to ancient practices proven to alleviate modern-day stress. Our experience is simple, invigorating, and backed by science. Hot, cold, relax. 15 minutes sweating it out in the sauna, followed by up to 5 minutes in the cold plunge, and then a brief period of rehydration and rest on our heated furniture. Then, repeat. There's no phones allowed. But we're not just about disconnecting. We're about reconnecting. We're creating a home for a new generation of bathers. Sauna and cold water therapy are remarkably beneficial for personal and community wellness rituals. From sleep and anxiety, to recovery and pain management, to plain old relaxation and clarity. We have space for you. However you hot cold relax.
Good afternoon, everyone, and welcome to MIT 6S191. My name is Alexander Amini, and I'll be one of your instructors for the course this year, along with Ava. And together, we're really excited to welcome you to this really incredible course. This is a very fast-paced and very intense 1 week that we're about to go through together, right? So we're going to cover the foundations of a also very fast-paced moving field, and a field that has been rapidly changing over the past 8 years that we have taught this course at MIT. Now, over the past decade, in fact, even before we started teaching this course, AI and deep learning has really been revolutionizing so many different advances and so many different areas of science, mathematics, physics, and so on. And not that long ago, we were having challenges and problems that we did not think were necessarily solvable in our lifetimes that AI is now actually solving beyond human performance today. And each year that we teach this course, this lecture in particular is getting harder and harder to teach because for an introductory level course, this lecture, lecture number 1, is the lecture that's supposed to cover the foundations. And if you think to any other introductory course, like an introductory course 101 on mathematics or biology, those lecture ones don't really change that much over time. But we're in a rapidly changing field of AI and deep learning where even these types of lectures are rapidly changing. So let me give you an example of how we introduced this course only a few years ago.
Hi, everybody, and welcome to MIT 6S191, the official introductory course on deep learning taught here at MIT. Deep learning is revolutionizing so many fields, from robotics to medicine and everything in between. You'll learn the fundamentals of this field and how you can build some of these incredible algorithms. In fact, this entire speech and in video are not real and were created using deep learning and artificial intelligence. And in this class, you'll learn how. It has been an honor to speak with you today, and I hope you enjoy the course.
The really surprising thing about that video to me when we first did it was how viral it went a few years ago. So just in a couple months of us teaching this course a few years ago, that video went very viral, right? It got over 1 million views within only a few months. People were shocked with a few things, but the main one was the realism of AI to be able to generate content that looks and sounds extremely hyper-realistic, right? And when we did this video, when we created this for the class only a few years ago, this video took us about $10,000 in compute to generate, just about a minute-long video. Extremely, I mean, if you think about it, I would say it's extremely expensive to compute something what we look at like that. And maybe a lot of you are not really even impressed by the technology today because you see all of the amazing things that AI and deep learning are producing. Now, fast forward today, the progress in deep learning, and people were making all kinds of exciting remarks about it when it came out a few years ago. Now this is common stuff because AI is really doing much more powerful things than this fun little introductory video. So today, fast forward 4 years, about 4 years to today, right? Now where are we? AI is now generating content with deep learning being so commoditized, right? Deep learning is in all of our fingertips now, online, in our smartphones, and so on. In fact, we can use deep learning to generate these types of hyper-realistic pieces of media and content entirely from English language without even coding anymore, right? So before we had to actually go in, train these models and really code them to be able to create that 1 minute long video. Today we have models that will do that for us end to end directly from English language. So we can prompt these models to create something that the world has never seen before, a photo of an astronaut riding a horse, and these models can imagine those pieces of content entirely from scratch. My personal favorite is actually how we can now ask these deep learning models to create new types of software, even themselves being software, to ask them to create, for example, to write this piece of TensorFlow code to train a neural network, right? We're asking a neural network to write TensorFlow code to train another neural network. And our model can produce examples of functional and usable pieces of code that satisfy this English prompt while walking through each part of the code independently. So not even just producing it, but actually educating and teaching the user on what each part of these code blocks are actually doing. You can see an example here. And really what I'm trying to show you with all of this is that this is just highlighting how far deep learning has gone, even in a couple years since we've started teaching this course. I mean, going back even from before that to 8 years ago. And the most amazing thing that you'll see in this course, in my opinion, is that what we try to do here is to teach you the foundations of all of this, how all of these different types of models are created from the ground up, and how we can make all of these amazing advances possible so that you can also do it on your own as well. And like I mentioned in the beginning, this introduction course is getting harder and harder to do and to make every year. I don't know where the field is going to be next year, and I mean, that's my honest truth, or even honestly in even 1 or 2 months' time from now, just because it's moving so incredibly fast. But what I do know is that what we will share with you in the course as part of this 1 week is going to be the foundations of all of the technologies that we have seen up until this point that will allow you to create that future for yourselves and to design brand new types of deep learning models using those fundamentals and those foundations. So let's get started with all of that and start to figure out how we can actually achieve all of these different pieces and learn all of these different components. And we should start this by really tackling the foundations from the very beginning and asking ourselves, we've heard this term, I think all of you, obviously, before you've come to this class today, you've heard the term deep learning, but it's important for you to really understand how this concept of deep learning relates to all of the other pieces of science that you've learned about so far. So to do that, we have to start from the very beginning and start by thinking about what is intelligence at its core. Not even artificial intelligence, but just intelligence, right? So the way I like to think about this is that I like to think that intelligence is the ability to process information which will inform your future decision-making abilities. Now, that's something that we as humans do every single day. Now, artificial intelligence is simply the ability for us to give computers that same ability to process information and inform future decisions. Now, machine learning is simply a subset of artificial intelligence. The way you should think of machine learning is just as the programming ability, or let's say even simpler than that, machine learning is the science of trying to teach computers how to do that processing of information and decision-making from data. So instead of hard-coding some of these rules into machines and programming them, like we used to do in software engineering classes, now we're going to try and do that processing of information and informing of future decision-making abilities directly from data. And then going one step deeper, deep learning is simply the subset of machine learning which uses neural networks to do that. It uses neural networks to process raw pieces of data, now unprocessed data, and allows them to ingest all of those very large data sets and inform future decisions. Now, that's exactly what this class is really all about. If I had to summarize this class in just one line, it's all about teaching machines how to process data, process information, and inform decision-making abilities from that data, and learn it from that data. Now, this program is split between really two different parts. So you should think of this class as being captured with both technical lectures, which, for example, this is one part of, as well as software labs. We'll have several new updates this year, as I mentioned earlier, just covering the rapid changing of advances in AI, and especially in some of the later lectures, you're going to see those. The first lecture today is going to cover the foundations of neural networks themselves, starting with really the building blocks of every single neural network, which is called the perceptron. And finally, we'll go through the week and we'll conclude with a series of exciting guest lectures from industry-leading sponsors of the course. And finally, on the software side, after every lecture, you'll also get software experience and project building experience to be able to take what we teach in lectures and actually deploy them in real code and actually produce based on the learnings that you find in this lecture. And at the very end of the class, from the software side, you'll have the ability to participate in a really fun day at the very end, which is the project pitch competition. It's kind of like a Shark Tank style competition of all of the different projects from all of you, and win some really awesome prizes. So let's step through that a little bit briefly. This is the syllabus part of the lecture. So each day we'll have dedicated software labs that will basically mirror all of the technical lectures that we go through, just helping you reinforce your learnings. And these are coupled with, each day, again, coupled with prizes for the top performing software solutions that are coming up in the class. This is going to start with today, with Lab 1. And it's going to be on music generation. So you're going to learn how to build a neural network that can learn from a bunch of musical songs, listen to them, and then learn to compose brand new songs in that same genre. Tomorrow, Lab 2 on computer vision, you're going to learn about facial detection systems. You'll build a facial detection system from scratch using convolutional neural networks. You'll learn what that means tomorrow. And you'll also learn how to actually debias, remove the biases that exist in some of these facial detection systems, which is a huge problem for the state-of-the-art solutions that exist today. And finally, a brand new lab at the end of the course will focus on large language models, where you're actually going to take a multi-billion parameter large language model and fine-tune it to build an assistive chatbot and evaluate a set of cognitive abilities, ranging from mathematics abilities to scientific reasoning to logical abilities and so on. And finally, at the very, very end, there will be a final project pitch competition for up to 5 minutes per team. And all of these are accompanied with great prizes. So definitely there will be a lot of fun to be had throughout the week. There are many resources to help with this class. You'll see them posted here. You don't need to write them down because all of the slides are already posted online. Please post to Piazza if you have any questions. And of course, we have an amazing team that is helping teach this course this year. and you can reach out to any of us if you have any questions. The Piazza is a great place to start. Myself and Ava will be the two main lecturers for this course, Monday through Wednesday especially, and we'll also be hearing some amazing guest lectures on the second half of the course, which definitely you would want to attend because they really cover the really state-of-the-art sides of deep learning that's going on in industry outside of academia. And very briefly, just want to give a huge thanks to all of our sponsors who, without their support, this course, like every year, would not be possible. Okay, so now let's start with the fun stuff and my favorite part of the course, which is the technical parts. And let's start by just asking ourselves a question, right? Which is, why do we care about all of this? Why do we care about deep learning? Why did you all come here today to learn and to listen to this course? So to understand, I think we, again, need to go back a little bit to understand how machine learning used to be performed, right? So machine learning typically would define a set of features, or you can think of these as kind of a set of things to look for in an image or in a piece of data. Usually these are hand engineered, so humans would have to define these themselves. And the problem with these is that they tend to be very brittle in practice, just by nature of a human defining them. So the key idea of deep learning and what you're going to learn throughout this entire week is this paradigm shift of trying to move away from hand engineering features and rules that computers should look for, and instead trying to learn them directly from raw pieces of data. So what are the patterns that we need to look at in data sets such that if we look at those patterns, we can make some interesting decisions and interesting actions can come out. So for example, if we wanted to learn how to detect faces, we might, if you think even how you would detect faces, right? If you look at a picture, what are you looking for to detect a face? You're looking for some particular patterns. You're looking for eyes and noses and ears. And when those things are all composed in a certain way, you would probably deduce that that's a face, right? Computers do something very similar. So they have to understand what are the patterns that they look for, what are the eyes and noses and ears of those pieces of data, and then from there, actually detect and predict from them. So the really interesting thing, I think, about deep learning is that these foundations for doing exactly what I just mentioned, picking out the building blocks, picking out the features from raw pieces of data, and the underlying algorithms themselves have existed for many, many decades. Now, the question I would ask at this point is, so why are we studying this now? And why is all of this really blowing up right now and exploding with so many great advances? Well, for one, there's three things, right? Number one is that the data that is available to us today is significantly more pervasive. These models are hungry for data. You're going to learn about this more in detail, but these models are extremely hungry for data. And we're living in a world right now, quite frankly, where data is more abundant than it has ever been in our history. Now, secondly, these algorithms are massively compute hungry, and they're massively parallelizable, which means that they have greatly benefited from compute hardware, which is also capable of being parallelized. The particular name of that hardware is called a GPU, right? GPUs can run parallel processing streams of information and are particularly amenable to deep learning algorithms. And the abundance of GPUs and that compute hardware has also pushed forward what we can do in deep learning. And finally, the last piece is the software, right? It's the open source tools that are really used as the foundational building blocks of deploying and building all of these underlying models that you're going to learn about in this course. And those open source tools have just become extremely streamlined, making this extremely easy for all of us to learn about these technologies within an amazing one-week course like this. So let's start now with understanding, now that we have some of the background, let's start with understanding exactly what is the fundamental building block of a neural network. Now, that building block is called a perceptron, right? Every single neural network is built up of multiple perceptrons, and you're going to learn how those perceptrons, number one, compute information themselves, and how they connect to these much larger billion parameter neural networks. So the key idea of a perceptron.
I'm so tired of paying a ton for phone bills. There's no reason it needs to be so expensive. I finally discovered the ultimate game changer, my wireless plan with Mint Mobile. For the first 3 months, new customers can get the unlimited plan for just $15 a month. Plus, switching over was so easy, I literally did it from home in just minutes. There's so many different data options, so you can find the one for you. You've got to check out Mint Mobile.
A local nonprofit taking a bold step today to increase the amount of affordable housing here in Oklahoma City.
And they're using a futuristic construction company to make this happen. Our Evan Onstad here in studio with us. And Evan, Catholic Charities saying they hope.
So the key idea of a perceptron, or even simpler, think of this as a single neuron, right? So a neural network is composed of many, many neurons, and a perceptron is just one neuron. So that idea of a perceptron is actually extremely simple, and I hope that by the end of today, this idea and this processing of a perceptron becomes extremely clear to you. So let's start by talking about just the forward propagation of information through a single neuron. Now, single neurons ingest information. They can actually ingest multiple pieces of information. So here you can see this neuron taking as input 3 pieces of information, x1, x2, and xm. Right, so we define this set of inputs called x, 1 through m, and each of these inputs, each of these numbers is going to be element-wise multiplied by a particular weight. So this is going to be denoted here by w1 through wm. So this is a corresponding weight for every single input, and you should think of this as really, every weight being assigned to that input, right? The weights are part of the neuron itself. Now, you multiply all of these inputs with their weights together, and then you add them up. We take this single number after that addition, and you pass it through what's called a nonlinear activation function to produce your final output, which here we're calling y. Now, what I just said is not entirely correct, right? So I missed out one critical piece of information. That piece of information is that we also have what you can see here is called this bias term. That bias term is actually what allows your neuron to shift its activation function horizontally on that x-axis, if you think of it, right? So on the right side, you can now see this diagram illustrating mathematically that single equation that I talked through kind of conceptually. Right now you can see it mathematically written down as one single equation. And we can actually rewrite this using linear algebra, using vectors and dot products. So let's do that. Right, so now our inputs are going to be described by a capital X, which is simply a vector of all of our inputs, x1 through xm. And then our weights are going to be described by a capital W, which is going to be w1 through wm. The input is obtained by taking the dot product of x and w, right? That dot product does that element-wise multiplication and then sums all of the element-wise multiplications. And then here's the missing piece, is that we're now going to add that bias term. Here we're calling the bias term W0, right? And then we're going to apply the nonlinearity, which here denoted as G, excuse me. So I've mentioned this nonlinearity a few times, this activation function. Let's dig into it a little bit more so we can understand what is actually this activation function doing. Well, I said a couple things about it. I said it's a nonlinear function, right? Here you can see one example of an activation function. One commonly used activation function is called the sigmoid function, which you can actually see here on the bottom right-hand side of the screen. The sigmoid function is very commonly used because its outputs, right, so it takes as input any real number. The x-axis is infinite plus or minus, but on the y-axis, it basically squashes every input x into a number between 0 and 1. So it's actually a very common choice for things like probability distributions if you want to convert your answers into probabilities or learn or teach a neuron to learn a probability distribution. But in fact, there are actually many different types of nonlinear activation functions that are used in neural networks. And here are some common ones. And again, throughout this presentation, you'll see these little TensorFlow icons actually throughout the entire course. You'll see these TensorFlow icons on the bottom, which basically just allow you to relate some of the foundational knowledge that we're teaching in the lectures to some of the software labs. And this might provide a good starting point for a lot of the pieces that you have to do later on in the software parts of the class. So the sigmoid activation, which we talked about in the last slide, here it's shown on the left-hand side, right? This is very popular because of the probability distributions, right? It squashes everything between 0 and 1. But you see two other very common types of activation functions in the middle and the right-hand side as well. So the other very, very common one, probably this is the one now that's the most popular activation function, is now on the far right-hand side. It's called the ReLU activation function, or also called the rectified linear unit. So basically it's linear everywhere, except there's a nonlinearity at x equals 0. So there's a kind of a step or a break discontinuity, right? So the benefit of this, very easy to compute. It still has the nonlinearity, which we kind of need, and we'll talk about why we need it in 1 second. But it's very fast, right? Just two linear functions piecewise combined with each other. Okay, so now let's talk about why we need a nonlinearity in the first place. Why not just deal with a linear function that we pass all of these inputs through? So the point of the activation function, even at all, why do we have this, is to introduce nonlinearities in of itself. So what we want to do is to allow our neural network to deal with nonlinear data, right? Our neural networks need the ability to deal with nonlinear data because the world is extremely nonlinear, right? This is important because, if you think of the real world, real data sets, this is just the way they are, right? If you look at data sets like this one, green and red points, right? And I ask you to build a neural network that can separate the green and the red points. This means that we actually need a nonlinear function to do that. We cannot solve this problem with a single line, right? In fact, if we used linear functions as your activation function, no matter how big your neural network is, it's still a linear function because linear functions combined with linear functions are still linear. So no matter how deep or how many parameters your neural network has, the best it would be able to do to separate these green and red points would look like this. But adding nonlinearities allows our neural networks to be smaller by allowing them to be more expressive and capture more complexities in the data sets. And this allows them to be much more powerful in the end. So let's understand this with a simple example. Imagine I give you now this trained neural network. So what does it mean, trained neural network? It means now I'm giving you the weights, right? Not only the inputs, but I'm going to tell you what the weights of this neural network are. So here, let's say the bias term, W0, is going to be 1, and our W vector is going to be 3 and -2, right? These are just the weights of your trained neural network. Well, let's worry about how we got those weights in a second. But this network has two inputs, x1 and x2. Now, if we want to get the output of this neural network, all we have to do, simply, is to do the same story that we talked about before, right? It's dot product, inputs with weights, add the bias, and apply the nonlinearity, right? And those are the three components that you really have to remember as part of this class, right? Dot product, add the bias, and apply a nonlinearity. That's going to be the process that keeps repeating over and over and over again for every single neuron. After that happens, that neuron is going to output a single number, right? Now let's take a look at what's inside of that nonlinearity. It's simply a weighted combination of those inputs with those weights, right? So if we look at what's inside of G, right? Inside of G is a weighted combination of X and W, right? Added with a bias, right? That's going to produce a single number, right? But in reality, for any input that this model could see, what this really is a two-dimensional line because we have two parameters in this model. So we can actually plot that line. We can see exactly how this neuron separates points on these axes between x1 and x2, right? These are the two inputs of this model. We can see exactly and interpret exactly what this neuron is doing, right? We can visualize its entire space because we can plot the line that defines this neuron, right? So here we're plotting when that line equals 0. And in fact, if I give that neuron, in fact, a new data point, here the new data point is x1 equals -1 and x2 equals 2, just an arbitrary point in this two-dimensional space. We can plot that point in the two-dimensional space, and depending on which side of the line it falls on, it tells us, what the answer is going to be, what the sign of the answer is going to be, and also what the answer itself is going to be, right? So if we follow that that equation written on the top here and plug in -1 and 2, we're going to get 1 minus 3 minus 4, which equals minus 6, right? And when I put that into my nonlinearity, G, I'm going to get a final output of 0.002, right? So that don't worry about the final output. That's just going to be the output for that sigmoid function. But the important point to remember here is that the sigmoid function actually divides the space into these two parts, right? It squashes everything between 0 and 1, but it divides it implicitly by everything less than 0.5 and greater than 0.5, depending on if x is less than 0 or greater than 0. So depending on which side of the line that you fall on, remember the line is when x equals 0. The input to the sigmoid is 0. If you fall on the left side of the line, your output will be less than 0.5 because you're falling on the negative side of the line. If your input is on the right side of the line, now your output is going to be greater than 0.5, right? So here we can actually visualize this space. This is called the feature space of a neural network. We can visualize it in its completion, right? We can totally visualize and interpret this neural network, and we can understand exactly what it's going to do for any input that it sees, right? But of course, this is a very simple neuron, right? It's not a neural network, it's just one neuron. And even more than that, it's even a very simple neuron. It only has 2 inputs, right? So in reality, the types of neurons that you're going to be dealing with in this course are going to be neurons and neural networks with millions or even billions of these parameters, right, of these inputs, right? So here we only have 2 weights, W1, W2, but today's neural networks have billions of these parameters. So drawing these types of plots that you see here obviously becomes a lot more challenging. It's actually not possible. But now that we have some of the intuition behind a perceptron, let's start now by building neural networks and seeing how all of this comes together. So let's revisit that previous diagram.
This is for the architects of tomorrow. The ones who create to make a lasting impact. Who are rewriting the world with tools that push what's possible. For those who build with responsible AI.
So let's revisit that previous diagram of a perceptron. Now, again, if there's only one thing to take away from this lecture right now, it's to remember how a perceptron works. That equation of a perceptron is extremely important for every single class that comes after today. And there's only 3 steps. It's dot product with the inputs, add a bias, and apply your nonlinearity. Let's simplify the diagram a little bit. I'll remove the weight labels from this picture. And now you can assume that if I show a line, every single line has an associated weight that comes with that line. Right? I'll also remove the bias term for simplicity. Assume that every neuron has that bias term. I don't need to show it. And now note that the result here, now calling it Z, which is just the dot product plus bias before the nonlinearity, is the output is going to be linear, first of all. It's just a weighted sum of all of those pieces. We have not applied the nonlinearity yet. But our final output is just going to be G of Z. It's the activation function, our nonlinear activation function applied to Z. Now, if we want to step this up a little bit more and say, what if we had a multi-output function? Now we don't just have one output, but let's say we want to have 2 outputs. Well, now we can just have 2 neurons in this network, right? Every neuron sees all of the inputs that came before it, but now you see the top neuron is going to be predicting an answer, and the bottom neuron will predict its own answer. Now, importantly, one thing you should really notice here is that each neuron has its own weights, right? Each neuron has its own lines that are coming into just that neuron, right? So they're acting independently, but they can later on communicate if you have another layer, right? So let's start now by initializing this process a bit further and thinking about it more programmatically, right? What if we wanted to program this neural network ourselves from scratch, right? Remember that equation I told you, it didn't sound very complex. It's take a dot product, add a bias, which is a single number, and apply a nonlinearity. Let's see how we would actually implement something like that. So to define the layer, right, we're now going to call this a layer, which is a collection of neurons, right? We have to first define how that information propagates through the network. So we can do that by creating a call function. Here, first, we're going to actually define the weights for that network, right? So remember, every neuron, I should say, every neuron has weights and a bias, right? So let's define those first. We're going to create the call function to actually see how we can pass information through that layer, right? So this is going to take as input and inputs, right? This is like what we previously called X. And it's the same story that we've been seeing this whole class, right? We're going to matrix multiply or take a dot product of our inputs with our weights. We're going to add a bias, and then we're going to apply a nonlinearity. It's really that simple, right? We've now created a single layer neural network, right? So this line in particular, this is the part that allows us to be a powerful neural network, maintaining that nonlinearity. And the important thing here is to note that modern deep learning toolboxes and libraries already implement a lot of these for you, right? So it's important for you to understand the foundations, but in practice, all of that layer architecture and all of that layer logic is actually implemented in tools like TensorFlow and PyTorch through a dense layer, right? So here you can see an example of calling or creating, initializing a dense layer with 2 neurons, right? Allowing it to feed in an arbitrary set of inputs. Here we're seeing these 2 neurons in a layer being fed 3 inputs, right? And in code, it's only reduced down to this one line of TensorFlow code, making it extremely easy and convenient for us to use these functions and call them. So now let's look at our single layered neural network. This is where we have now one layer between our input and our outputs, right? So we're slowly and progressively increasing the complexity of our neural network so that we can build up all of these building blocks, right? This layer in the middle is called a hidden layer, right? Obviously, because you don't directly observe it, you don't directly supervise it, right? You do observe the 2 input and output layers, but your hidden layer is just kind of a neuron layer that you don't directly observe, right? It just gives your network more capacity, more learning complexity. And since we now have a transformation function from inputs to hidden layers and hidden layers to output, we now have a 2-layered neural network, right? Which means that we also have 2 weight matrices, right? We don't have just the W1, which we previously had to create this hidden layer, but now we also have W2, which does the transformation from hidden layer to output layer. Yes?
What happens with the non-linearity? In hidden, you have just linear, so there's no, it's not, is it a perceptron or not?
Yes, so every hidden layer also has a nonlinearity accompanied with it, right? And that's a very important point, because if you don't have that perceptron, then it's just a very large linear function followed by a final nonlinearity at the very end, right? So you need that cascading and overlapping application of nonlinearities that occur throughout the network. Awesome. Okay, so now let's zoom in, look at a single unit in the hidden layer. Take this one, for example. Let's call it Z2, right? It's the second neuron in the first layer, right? It's the same perceptron that we saw before. We compute its answer by taking a dot product of its weights with its inputs, adding a bias, and then applying a nonlinearity. If we took a different hidden node, like Z3, the one right below it, we would compute its answer exactly the same way that we computed Z2, except its weights would be different than the weights of Z2. Everything else stays exactly the same. It sees the same inputs. But of course, I'm not going to actually show Z3 in this picture. And now this picture is getting a little bit messy. So let's clean things up a little bit more. I'm going to remove all the lines now and replace them just with these boxes, these symbols that will denote what we call a fully connected layer, right? So these layers now denote that everything in our input is connected to everything in our output, and the transformation is exactly as we saw it before: dot product, bias, and nonlinearity. And again, in code, to do this is extremely straightforward with the foundations that we've built up from the beginning of the class. We can now just define 2 of these dense layers, right? Our hidden layer on line 1 with n hidden units, and then our output layer with 2 hidden output units.
Does that mean the
function must be the same between layers? Non-linearity function does not need to be the same through each layer. Oftentimes it is because of convenience. There are some cases where you would want it to be different as well, especially in lecture 2. You're going to see nonlinearities be different even within the same layer, let alone different layers. But unless for a particular reason, generally convention is there's no need to keep them differently. Now, let's keep expanding our knowledge a little bit more. If we now want to make a deep neural network, not just a neural network like we saw on the previous slide, now it's deep. All that means is that we're now going to stack these layers on top of each other, one by one, more and more creating a hierarchical model, right? The ones where the final output is now going to be computed by going deeper and deeper and deeper into the neural network. And again, doing this in code, again, follows the exact same story as before, just cascading these TensorFlow layers on top of each other and just going deeper into the network. Okay, so now this is great because now we have at least a solid foundational understanding of how to not only define a single neuron, but how to define an entire neural network. And you should be able to actually explain at this point or understand how information goes from input through an entire neural network to compute an output. So now let's look at how we can apply these neural networks to solve a very real problem that I'm sure all of you care about. So here's a problem on how we want to build an AI system to learn to answer the following question, which is, will I pass this class? Right? I'm sure all of you are really worried about this question. So to do this, let's start with a simple input feature model. The two features that let's concern ourselves with are going to be number 1, how many lectures you attend, and number 2, how many hours you spend on your final project. So let's look at some of the past years of this class, right? We can actually observe how different people have lived in this space, right? Between how many lectures and how much time you spent on your final project. And you can actually see every point is a person. The color of that point is going to be if they passed or failed the class. And you can see and visualize kind of this feature space, if you will, that we talked about before. And then we have you. You fall right here. You're the point 4, 5, right in between this feature space. You've attended 4 lectures, and you will spend 5 hours on the final project. And you want to build a neural network to determine, given everyone else in the class, right, that I've seen from all of the previous years, you want to have your neural network help you to understand what is your likelihood that you will pass or fail this class. So let's do it. We now have all of the building blocks to solve this problem using a neural network. Let's do it. So we have 2 inputs. Those inputs are number of lectures you attend and number of hours you spend on your final project. It's 4 and 5. We can pass those 2 inputs to our 2 x1 and x2 variables. These are fed into this single hidden layered neural network. It has 3 hidden units in the middle. And we can see that the final predicted output probability for you to pass this class is 0.1 or 10%, right? So very bleak outcome. It's not a good outcome. The actual probability is 1, right? So attending 4 out of the 5 lectures and spending 5 hours on your final project, you actually lived in a part of the feature space which was actually very positive, right? It looked like you were going to pass the class. So what happened here? Anyone have any ideas? So why did the neural network get this so terribly wrong, right? Exactly. So this neural network is not trained. We haven't shown it any of that data, the green and red data, right? So you should really think of neural networks like babies, right? Before they see data, they haven't learned anything. There's no expectation that we should have for them to be able to solve any of these types of problems before we teach them something about the world. So let's teach this neural network something about the problem first, right? And to train it, we first need to tell our neural network when it's making bad decisions, right? So we need to teach it, right? Really train it to learn exactly like how we as humans learn in some ways, right? So we have to inform the neural network when it gets the answer incorrect so that it can learn how to get the answer correct, right? So the closer the answer is to the ground truth, so for example, the actual value for you passing this class was probability 1, 100%. but it predicted a probability of 0.1. We compute what's called a loss, right? So the closer these two things are together, the smaller your loss should be, and the more accurate your model should be. So let's assume that we have data not just from one student, but now we have data from many students. Many students have taken this class before, and we can plug all of them into the neural network and show them all to this system. Now we care not only about how the neural network did on just this one prediction, but we care about how it predicted on all of these different people that the neural network has shown in the past as well during this training and learning process. So when training the neural network, we want to find a network that minimizes the empirical loss between our predictions and those ground truth outputs. And we're going to do this on average across all of the different inputs that the model has seen. If we look at this problem of binary classification, right, between yeses and nos, right, will I pass the class or will I not pass the class? It's a 0 or 1 probability. And we can use what is called the softmax function or the softmax cross entropy function to be able to inform if this network is getting the answer correct or incorrect, right? The softmax cross or the cross entropy function, think of this as an objective function. It's a loss function that tells our neural network how far away these two probability distributions are, right? So the output is a probability distribution. We're trying to determine how bad of an answer the neural network is predicting so that we can give it feedback to get a better answer. Now let's suppose instead of predicting a binary output, we want to predict a real valued output, like any number. It can take any number, plus or minus infinity. So for example, if you wanted to predict the grade that you get in a class, right? It doesn't necessarily need to be between 0 and 1 or 0 and 100 even, right? You could now use a different loss in order to produce that value because our outputs are no longer a probability distribution, right? So for example, what you might do here is compute a mean squared error probability or mean squared error loss function between your true value or your true grade of the class and the predicted grade, right? These are two numbers. They're not probabilities necessarily. You compute their difference, you square it to look at a distance between the two, an absolute distance, right? The sign doesn't matter. And then you can minimize this thing, right? Okay, great. So let's put all of this loss information with this problem of finding our network weights into a unified problem and a unified solution to actually train our neural network. So we know that we
Need a confidence boost when filing your own taxes? Add a tax pro review when you file online with H&R Block. A tax pro will ensure you the best possible outcome and then file your return for you. Tax pro review. It's the convenience of home and the confidence of a pro.
So we know that we want to find a neural network that will solve this problem on all this data on average, right? That's how we contextualized this problem earlier in the lectures. This means effectively that we're trying to solve, or we're trying to find, what are the weights for our neural network? What are this big vector W that we talked about earlier in the lecture? What is this vector W? Compute this vector W for me based on all of the data that we have seen. Right. Now, the vector W is also going to determine what is the loss, right? So given a single vector W, we can compute how bad is this neural network performing on our data, right? So what is the loss? What is this deviation from the ground truth of our network based on where it should be? Now, remember that W is just a group of a bunch of numbers, right? It's a very big list of numbers, a list of weights for every single layer and every single neuron in our neural network, right? So it's just a very big list or a vector of weights. We want to find that vector. What is that vector based on a lot of data? That's the problem of training a neural network. And remember, our loss function is just a simple function of our weights. If we have only two weights in our neural network, like we saw earlier in the slide, then we can plot the loss landscape over this two-dimensional space, right? So we have two weights, W1 and W2, and for every single configuration or setting of those two weights, our loss will have a particular value, which here we're showing is the height of this graph, right? So for any W1 and W2, what is the loss? And what we want to do is find the lowest point. What is the best loss? What are the weights such that our loss will be as good as possible? So the smaller the loss, the better. So we want to find the lowest point in this graph. Now, how do we do that, right? So the way this works is we start somewhere in this space. We don't know where to start, so let's pick a random place to start, right? Now, from that place, let's compute what's called the gradient of the landscape at that particular point. This is a very local estimate of where is going up, basically. Where is the slope increasing at my current location, right? That informs us not only where the slope is increasing, but more importantly, where the slope is decreasing. If I negate the direction, if I go in the opposite direction, I can actually step down into the landscape and change my weights such that I lower my loss. So let's take a small step, just a small step, in the opposite direction of the part that's going up. Let's take a small step going down, and we'll keep repeating this process. We'll compute a new gradient at that new point, and then we'll take another small step, and we'll keep doing this over and over and over again until we converge at what's called a local minimum, right? So based on where we started, it may not be a global minimum of everywhere in this lost landscape, but let's find ourselves now in a local minimum, and we're guaranteed to actually converge by following this very simple algorithm at a local minimum. So let's summarize now this algorithm. This algorithm is called gradient descent. Let's summarize it first in pseudocode, and then we'll look at it in actual code in a second. So there's a few steps. First step is we initialize our location somewhere randomly in this weight space, right? We compute the gradient of our loss with respect to our weights, okay? And then we take a small step in the opposite direction, and we keep repeating this in a loop over and over and over again, and we say we'll keep doing this until convergence, right? Until we stop moving, basically, and our network basically finds where it's supposed to end up. We'll talk about this small step, right? So we're multiplying our gradient by what I keep calling is a small step. We'll talk about that a bit more in later part of this lecture. But for now, let's also very quickly show the analogous part in code as well. And it mirrors very nicely, right? So we'll randomly initialize our weights. This happens every time you train a neural network. You have to randomly initialize the weights. And then you have a loop, right? Here showing it without even convergence, right? We're just going to keep looping forever, where we say, okay, we're going to compute the loss at that location, compute the gradient, so which way is up, and then we just negate that gradient, multiply it by some what's called learning rate, LR, denoted here. It's a small step, and then we take a direction in that small step. So let's take a deeper look at this term here. This is called the gradient, right? This tells us which way is up in that landscape. And this, again, it tells us even more than that. It tells us how is our landscape, how is our loss changing as a function of all of our weights. But I actually have not told you how to compute this. So let's talk about that process. That process is called backpropagation. We'll go through this very, very briefly. And we'll start with the simplest neural network that's possible, right? So we already saw the simplest building block, which is a single neuron. Now let's build the simplest neural network, which is just a one neuron neural network, right? So it has one hidden neuron. It goes from input to hidden neuron to output. And we want to compute the gradient of our loss with respect to this weight, W2. Okay, so I'm highlighting it here. So we have two weights. Let's compute the gradient first with respect to W2. And that tells us how much does a small change in W2 affect our loss. Does our loss go up or down if we move our W2 a little bit in one direction or another? So let's write out this derivative. We can start by applying the chain rule backwards from the loss through the output. And specifically, we can actually decompose this derivative, this gradient, into two parts, right? So the first part, we're decomposing it from dj, dw2, into dj, dy, right, which is our output, multiplied by dy, dw2, right? This is all possible, right? It's a chain rule. I'm just reciting a chain rule here from calculus. This is possible because y is only dependent on the previous layer. And now let's suppose we don't want to do this for W2, but we want to do it for W1. We can use the exact same process, right? But now it's one step further, right? We'll now replace W2 with W1. We need to apply the chain rule yet again, once again, to decompose the problem further. And now we propagate our old gradient that we computed for W2 all the way back one more step to the weight that we're interested in, which in this case is W1. And we keep repeating this process over and over again, propagating these gradients backwards from output to input to compute. Ultimately, what we want in the end is this derivative of every weight, so the derivative of our loss with respect to every weight in our neural network. This tells us how much does a small change in every single weight in our network affect the loss. Does our loss go up or down if we change this weight a little bit in this direction or a little bit in that direction? Yes?
You use the term neuron instead of perceptron. Is there a functional difference?
Neuron and perceptron are the same. So typically people say neural network, which is why like a single neuron, it's also gotten popularity. But originally a perceptron is the formal term. The two terms are identical. Okay, so now we've covered a lot. So we've covered the forward propagation of information through a neuron and through a neural network all the way through. And we've covered now the back propagation of information to understand how we should change every single one of those weights in our neural network to improve our loss. So that was the backprop algorithm. In theory, it's actually pretty simple. It's just a chain rule, right? There's actually nothing more than just the chain rule. And the nice part is that deep learning libraries actually do this for you. So they compute backprop for you. You don't actually have to implement it yourself, which is very convenient. But now it's important to touch on, even though the theory is actually not that complicated for backpropagation, let's touch on it now from practice. Now thinking a little bit towards your own implementations when you want to implement these neural networks, what are some insights? So optimization of neural networks in practice is a completely different story. It's not straightforward at all. And in practice, it's very difficult and usually very computationally intensive to do this backprop algorithm. So here's an illustration from a paper that came out a few years ago that actually attempted to visualize a very deep neural network's loss landscape. So previously, we had that other depiction, visualization of how a neural network would look in a two-dimensional landscape. Real neural networks are not two-dimensional. They're hundreds or millions or billions of dimensions. And now, what would those loss landscapes look like? You can actually try some clever techniques to actually visualize them. This is one paper that attempted to do that. And it turns out that they look extremely messy, right? The important thing is that if you do this algorithm and you start in a bad place, depending on your neural network, you may not actually end up in the global solution, right? So your initialization matters a lot, and you need to kind of traverse these local minima and try and help you find the global minima. Or even more than that, you need to construct neural networks that have loss landscapes that are much more amenable to optimization than this one, right? So this is a very bad loss landscape. There are some techniques that we can apply to our neural networks that smooth out their loss landscape and make them easier to optimize. So recall that update equation that we talked about earlier with gradient descent, right? So there is this parameter here that we didn't talk about. We described this as the little step that you could take, right? So it's a small number that you multiply with the direction, which is your gradient. It just tells you, okay, I'm not gonna just go all the way in this direction. I'll just take a small step in this direction. So in practice, even setting this value, right? It's just one number. Setting this one number can be rather difficult, right? If we set the learning rate too small, then the model can get stuck in these local minima, right? So here it starts, and it kind of gets stuck in this local minima. It converges very slowly, even if it doesn't get stuck. If the learning rate is too large, it can kind of overshoot, and in practice, it even diverges and explodes, and you don't actually ever find any minima. Now, ideally, what we want is to use learning rates that are not too small and not too large, so they're large enough to basically avoid those local minima, but small enough such that they won't diverge and they will actually still find their way into the global minima. So something like this is what you should intuitively have in mind, right? So something that can overshoot the local minimas, but find itself into a better minima and then finally stabilize itself there. So how do we actually set these learning rates, right, in practice? What does that process look like? Now, idea number one is very basic, right? It's try a bunch of different learning rates and see what works. And that's actually not a bad process in practice. It's one of the processes that people use. So that's interesting. But let's see if we can do something smarter than this, and let's see how we can design algorithms that can adapt to the landscapes, right? So in practice, there's no reason why this should be a single number, right? Can we have learning rates that adapt to the model, to the data, to the landscapes, to the gradients that it's seeing around? So this means that the learning rate may actually increase or decrease as a function of the gradients in the loss function, right? How fast we're learning, or many other options, right? There are many different ideas that could be done here. And in fact, there are many widely used different procedures or methodologies for setting the learning rate. And during your labs, we actually encourage you to try out some of these different ideas for different types of learning rates, and even play around with, what's the effect of increasing or decreasing your learning rate. You'll see very striking differences.
Do it, because it's on a closed interval. Why not just find the absolute minimum, test all the points?
Right. So a few things. Number one is that it's not a closed space, right? So there's an infinite, every weight can be plus or minus up to infinity, right? So even if it was a one-dimensional neural network with just one weight, it's not a closed space. In practice, it's even worse than that, because you have billions of dimensions, right? So not only is your space, your support system in one dimension, is it infinite, but you now have billions of infinite dimensions, right? Or billions of infinite support spaces. So it's not something that you can just search every weight, every possible weight in your configuration, or what is every possible weight that this neural network could take, and let me test them out, because it's not practical to do even for a very small neural network in practice. So in your labs, you can really try to put all of this information in this picture into practice, which defines your model, number one, right here, defines your optimizer, which previously we denoted as this gradient descent optimizer. Here we're calling it stochastic gradient descent, or SGD. We'll talk about that more in a second. And then also note that your optimizer, which here we're calling SGD, could be any of these adaptive optimizers. You can swap them out, and you should swap them out. You should test different things here to see the impact of these different methods on your training procedure, and you'll gain very valuable intuition for the different insights that will come with that as well. So I want to continue very briefly, just for the end of this lecture, to talk about tips for training neural networks in practice, and how we can focus on this powerful idea of really what's called batching data, right? Not seeing all of your data, but now talking about a topic called batching. So to do this, let's very briefly read.
At Walmart, living better is about more than just saving money. It's the ability to grow your skills and your family. The opportunity to earn a living, and a certificate, or a degree. At Walmart, living better means your career can be whatever you make of it.
So to do this, let's very briefly revisit this gradient descent algorithm. The gradient is actually this gradient computation, the backprop algorithm. I mentioned this earlier. It's a very computationally expensive operation, and it's even worse because we previously described it in a way where we would have to compute it over a summation over every single data point in our entire data set, right? That's how we defined it with the loss function. It's an average over all of our data points, which means that we're summing over all of our data points the gradients. So in most real-life problems, this would be completely infeasible to do because our data sets are simply too big and the models are too big to compute those gradients on every single iteration. Remember, this isn't just a one-time thing, right? It's every single step that you do. You keep taking small steps, so you keep needing to repeat this process. So instead, let's define a new gradient descent algorithm called SGD, stochastic gradient descent. Instead of computing the gradient over the entire data set, now let's just pick a single training point and compute that one training point's gradient, right? The nice thing about that is that it's much easier to compute that gradient, right? It only needs 1 point. And the downside is that it's very noisy. It's very stochastic since it was computed using just that one example, right? So you have that trade-off that exists. So what's the middle ground? Right, the middle ground is to take not one data point and not the full data set, but a batch of data, right? So take what's called a mini batch, right? This could be something in practice like 32 pieces of data is a common batch size. And this gives us an estimate of the true gradient, right? So you approximate the gradient by averaging the gradient of these 32 samples. It's still fast because 32 is much smaller than the size of your entire data set. But it's pretty quick now, right? It's still noisy, but it's okay usually in practice because you can still iterate much faster. And since B is normally not that large, again, think of something like in the tens or the hundreds of samples. It's very fast to compute this in practice compared to regular gradient descent. And it's also much more accurate compared to stochastic gradient descent. And the increase in accuracy of this gradient estimation allows us to converge to our solution significantly faster as well, right? It's not only about the speed, it's just about the increase in accuracy of those gradients allows us to get to our solution much faster, which ultimately means that we can train much faster as well and we can save compute. And the other really nice thing about mini batches is that they allow for parallelizing our computation. Right? And that was a concept that we had talked about earlier in the class as well, and here's where it's coming in. We can split up those batches, right? So those 32 pieces of data, let's say if our batch size is 32, we can split them up onto different workers, right? Different parts of the GPU can tackle those different parts of our data points. This can allow us to basically achieve even more significant speed-ups using GPU architectures and GPU hardware. Okay, finally, the last topic I want to talk about before we end this lecture and move on to lecture number 2 is overfitting, right? So overfitting is this idea that is actually not a deep learning centric problem at all. It's a problem that exists in all of machine learning, right? The key problem is that, the key problem is actually one that addresses how you can accurately define if your model is actually capturing your true data set, right? Or if it's just learning kind of the subtle details that are kind of spuriously correlating to your data set. So said differently, let me say it a bit differently now. So let's say we want to build models that can learn representations, okay, from our training data that still generalize to brand new unseen test points, right? That's the real goal here, is we want to teach our model something based on a lot of training data, but then we don't want it to do well in the training data. We want it to do well when we deploy it into the real world, and it's seeing things that it has never seen during training. So the concept of overfitting is exactly addressing that problem. Overfitting means if your model is doing very well on your training data, but very badly in testing, that means it's overfitting. It's overfitting to the training data that it saw. On the other hand, there's also underfitting, right? On the left-hand side, you can see basically not fitting the data enough, which means that you're going to achieve very similar performance on your testing distribution, but both are underperforming the actual capabilities of your system. Now, ideally, you want to end up somewhere in the middle, which is not too complex, where you're memorizing all of the nuances in your training data, like on the right, but you still want to continue to perform well, even based on the brand new data, so you're not underfitting as well. So to actually address this problem in neural networks and in machine learning in general, there's a few different ways that you should be aware of and how to do it, because you'll need to apply them as part of your solutions in your software labs as well. So the key concept here is called regularization, right? Regularization is a technique that you can introduce, and said very simply, all regularization is a way to discourage your model from these nuances in your training data from being learned. That's all it is. And as we've seen before, it's actually critical for our models to be able to generalize, not just on training data, but really what we care about is the testing data. So the most popular regularization technique that's important for you to understand is this very simple idea called dropout. Let's revisit this picture of a deep neural network that we've been seeing all lecture, right? In dropout, during training, what we're going to do is randomly set some of the activations, right, these outputs of every single neuron, to 0. We're just randomly going to set them to 0 with some probability, right? So let's say 50% is our probability. That means that we're going to take all of the activation in our neural network, and with a probability of 50%, before we pass that activation on to the next neuron, we're just going to set it to 0 and not pass on anything. So effectively, 50% of the neurons are going to be kind of shut down or killed in a forward pass, and you're only going to forward pass information with the other 50% of your neurons. So this idea is extremely powerful, actually, because it lowers the capacity of our neural network. It not only lowers the capacity of our neural network, but it's dynamically lowering it, because on the next iteration, we're going to pick a different 50% of neurons that we drop out. So constantly, the network is going to have to learn to build pathways, different pathways from input to output, and that it can't rely on any small part of the features that are present in any part of the training data set too extensively, right? Because it's constantly being forced to find these different pathways with random probabilities. So that's dropout. The second regularization technique is going to be this notion called early stopping, which is actually something that is model agnostic. You can apply this to any type of model as long as you have a testing set that you can play around with. So the idea here is that we have already a pretty formal mathematical definition of what it means to overfit, right? Overfitting is just when our model starts to perform worse on our test set. That's really all it is, right? So what if we plot over the course of training? So x-axis is as we're training the model. Let's look at the performance on both the training set and the test set. So in the beginning, you can see that the training set and the test set are both going down, and they continue to go down, which is excellent because it means that our model is getting stronger. Eventually, though, what you'll notice is that the test loss plateaus and starts to increase. On the other hand, the training loss, there's no reason why the training loss should ever need to stop going down, right? Training losses generally always continue to decay as long as there is capacity in the neural network to learn those differences, right? But the important point is that this continues for the rest of training, and we want to basically, we care about this point right here, right? This is the really important point because this is where we need to stop training, right? After this point, this is the happy medium, because after this point, we start to overfit on parts of the data where our training accuracy becomes actually better than our testing accuracy. So our testing accuracy is going bad, it's getting worse, but our training accuracy is still improving. So it means overfitting. On the other hand, on the left-hand side, this is the opposite problem, right? We have not fully utilized the capacity of our model, and the testing accuracy can still improve further, right? This is a very powerful idea, but it's actually extremely easy to implement in practice because all you really have to do is just monitor the loss over the course of training, right? And you just have to pick the model where the testing accuracy starts to get worse. So I'll conclude this lecture by just summarizing 3 key points that we've covered in the class so far. And this is a very jam-packed class, so the entire week is going to be like this, and today is just the start. So far we've learned the fundamental building blocks of neural networks, starting all the way from just one neuron, also called a perceptron. We learned that we can stack these systems on top of each other to create a hierarchical network, and how we can mathematically optimize those types of systems. And then finally, in the very last part of the class, we talked about just techniques, tips and techniques for actually training and applying these systems into practice. Now, in the next lecture, we're going to hear from Ava on deep sequence modeling using RNNs, and also a really new and exciting algorithm and type of model called the transformer, which is built off of this principle of attention. You're going to learn about it in the next class. But let's, for now, just take a brief pause, and let's resume in about 5 minutes just so we can switch speakers and Ava can start her presentation. Okay, thank you.
Easy. Find a pet-friendly Italian.
Okay, So maybe if those at the top can take their seats and we can get started. My name is Ava, and this is lecture 2 of 6S191. Thank you, John. Thank you, everyone. It should be a good time. It's a packed time. So today, in this portion of the class, we're going to talk about problems that we call sequence modeling problems. And in the first lecture with Alexander, we built up really about what deep learning is, what are the essentials of neural networks, what is a feed-forward model, and basically how do we train a neural network from scratch using gradient descent. And so now we're going to turn our attention to a class of problems that involve sequential data or sequential processing of data. And we're going to talk about how we can now build neural networks that are well suited to tackle these types of problems. And we're going to do that step by step, starting from the intuition and building up our concepts and our knowledge from there, starting back right where we left off with perceptrons and feed-forward models. So to do that, I'd like to first motivate what we even mean when we talk about something like sequence modeling or sequential data. So let's start with a super simple example. Let's say we have this image of a ball, and it's moving somewhere in this 2D space, and your task is to predict where this ball is going to travel to next. Now, if I give you no prior information about the history of the ball, its motion, how it's moving, so on, your guess on its next position is probably going to be nothing but a random guess. However now, right, if I give you, in addition to the current position of the ball, information about where that ball was in the past, the problem becomes much easier. It's more constrained. And we can come up with a pretty good prediction of where this ball is most likely to travel to next. I love this example because while it's a visual of a ball moving in a 2D space, right, this gets at the heart of what we mean when we're talking about sequential data or sequential modeling. And the truth is that beyond this, sequential data is really all around us, right? My voice, as I'm speaking to you, the audio waveform is sequential data that could be split up into chunks and sequences of sound waves and processed as such. Similarly, language, as we express and communicate in the written form in text, is very naturally modeled as a sequence of either characters, individual letters in this alphabet, or words or chunks that we could break up the text into smaller components and think about these chunks one by one in sequence. Beyond that, it's everywhere, right? From everything from medical readings like EKGs to financial markets and stock prices and how they change and evolve over time, to actually biological sequences like DNA or protein sequences that are representing an encoding of life, and far, far beyond, right? So I think it goes without saying that this is a very rich and very diverse type of data and class of problems that we can work with here. So when we think about now how we can build up from this to answer specific neural network and deep learning modeling questions, we can go back to the problem Alexander introduced in the first lecture, where we have a simple task, binary classification. Am I going to pass this class? We have some single input, and we're trying to generate a single output, a classification, based on that. With sequence modeling, we can now handle sequences of data that are sequences, meaning that we can have words in sentences in a large body of text, and we may want to reason about those sequences of words. For example, by taking in a sentence and saying, okay, is this a positive emotion, a positive sentiment associated with that sentence, or is it something different? We can also think about how we can generate sequences based on other forms of data. Let's say we have an image and we want to caption it with language. This is also can be thought of as a sequence modeling problem, where now, given a single input, we're trying to produce a sequential output. And finally, we can also consider tasks where we have sequence in, sequence out. Let's say you want to translate speech or text between two different languages. This is very naturally thought of as a many-to-many or a translation type problem that's ubiquitous in a lot of natural language translation types of frameworks. And so here, right, again, emphasizing the diversity and richness of the types of problems that we can consider when we think about sequence. So let's get to the heart of, from a modeling perspective and from a neural network perspective, how we can start to build models that can handle these types of problems. And this is something that I personally kind of had a really hard time wrapping my head around of initially when I got started with machine learning. How do we take something where we're mapping input to output and build off that to think about sequences and deal with this kind of time nature to sequence modeling problems? I think it really helps to, again, start from the fundamentals and build up intuition, which is a consistent theme throughout this course. So that's exactly what we're going to do. We're going to go step by step and hopefully walk away with understanding of the models for this type of problem. Okay, so this is the exact same diagram that Alexander just showed, right? The perceptron. We defined it where we have a set of inputs, x1 through xm, and our perceptron neuron, our single neuron, is operating on those to produce an output by taking its weight matrix, doing this linear combination, applying a nonlinear activation function, and then generating the output. We also saw how we can now stack perceptrons on top of each other to create what we call a layer, where now we can take an input, compute on it by this layer of neurons, and then generate an output as a result. Here, though, still we don't have a real notion of sequence or of time. What I'm showing you is just a static single input, single output, that we can now think about collapsing down the neurons in this layer to a simpler diagram, right, where I've just taken those neurons and simplified it into this green block. And in this input-output mapping, we can think of it as an input at a particular time step, just one time step t. And our neural network is trying to learn a mapping in between input and output at that time step. Okay, now I've been saying, okay, sequence data, it's data over time. What if we just took this very same model and applied it over and over again to all the individual time steps in a data point? What would happen then? All I've done here is I've taken that same diagram, I've just flipped it 90 degrees, it's now vertical, where we have an input vector of numbers, our neural network is computing on it, and we're generating an output. Let's say we have some sequential data, and we don't just have a single time step anymore. We have multiple individual time steps. We start from x0, our first time step in our sequence, and what we could do is we could now take that same model and apply it stepwise, step by step, to the other slices, the other time steps in the sequence. What could be a potential issue here that could arise from treating our sequential data in this kind of isolated step-by-step view? Yes, so I heard some comments back that inherently, right, there's this dependence in the sequence, but this diagram is completely missing that, right? There's no link between time step 0, time step 2. Indeed, right, in this setting, we're just treating the time steps in isolation, but I think we can all hopefully appreciate that output at a later time step, we want it to depend on the input and the observations we saw prior, right? So by treating these in isolation, we're completely missing out on this inherent structure to the data and the patterns that we're trying to learn. So the key idea here is, what if now we can build our neural network to try to explicitly model that relation, that time step to time step relation? And one idea is, let's just take this model and link the computation between the time steps together. And we can do this mathematically by introducing a variable that we call h. And h of t stands for this notion of a state of the neural network. And what that means is that state is actually learned and computed by the neuron and the neurons in this layer, and is then passed on and propagated time step to time step, and iteratively and sequentially updated. And so what you can see here now, as we're starting to build out this modeling diagram, is we're able to now produce a relationship where the output at a time step t now depends on both the input at that time step as well as the state from the prior time step that was just passed forward. And so this is a really powerful idea, right? Again, this is an abstraction of that we can capture in the neural network, this notion of state, capturing something about the sequence, and we're iteratively updating it as we make observations in this sequence data. And so this idea of passing the state forwards through time is the basis of what we call a recurrent cell, or neurons with recurrence. And what that means is that the function and the computation of the neuron is a product of both the current input and this past memory of previous time steps, and that's reflected in this variable of the state. And so on the right-hand side of this slide, what you're seeing is basically that model, that neural network model, unrolled or unwrapped across these individual time steps. But importantly, right, it's just one model that still has this relation back to itself. Okay, so this is kind of the mind-warpy part where you think about how do we unroll and visualize and reason about this operating over these individual time steps, or having this recurrence relation with respect to itself. So this is the core idea, this notion of recurrence of a neural network architecture that we call RNNs, recurrent neural networks. And RNNs are really one of the foundational frameworks for sequence modeling problems. So we're going to go through and build up a little more details and a little more of the math behind RNNs now that we have this intuition about the state update and about the recurrence relation. Okay, so our next step, all we're going to do is just formalize this thinking a little bit more. The key idea that we talked about is that we have this state, h of t, and it's updated at each time step as we're processing the sequence. That update is captured in what we call this recurrence relation. And this is a standard neural network operation, just like we saw in lecture 1, right? All we're doing is we're having this cell state variable, h of t. We're learning a set of weights, w, and that set of weights, w, is going to be a function of both the input at a particular time step and the information that was passed on from the prior time step in this variable h of t. And what is really important to keep in mind is for a particular RNN layer, right, we have the same set of weight parameters that are just being updated as the model is being learned. Same function, same set of weights. The difference is just we're processing the data time step by time step. We can also think of this from another angle in terms of how we can actually implement an RNN, right? We think about initializing the hidden state and initializing an input sentence broken up into individual words that we want this RNN to process. To make updates to the hidden state of that RNN, all we're going to do is basically iterate through each of the individual words, the individual time steps in the sentence, and update the hidden state and generate an output prediction as a function of the current word and the hidden state. And then at the very end, we can then take that learned model, that learned updated hidden state, and generate now the next word prediction for what word comes next at the end of the sentence. And so this is
our students. They are going out and changing the world.
They're the best professors I've had. It's the combination of their passion, knowledge, and energy.
The participants are building networks across the globe and across industries.
I am constantly amazed at how the various people in the classrooms and the living groups have changed my mind.
It's going to really change your life and your career. Go for it.
And so this is this idea of how the RNN includes both a state update and finally an output that we can generate per time step. And so to walk through this component, right, we have this input vector, x of t. We can use a mathematical description based on the nonlinear activation function and a set of neural network weights to update the hidden state h of t. And while this may seem complicated, right, this is really very much similar to what we saw prior. All we're doing is we're learning a matrix of weights. We are learning an individual matrix for updating the hidden state, and then one for updating the input. We're multiplying those by their inputs, adding them together, applying a nonlinearity, and then using this to update the actual state variable h of t. Finally, then, we can then output an actual prediction at that time step as a function of that updated internal state, h of t. Right, so the RNN has updated its state. We apply another weight matrix and then generate an output prediction according to that. Question?
Choose different nonlinear functions into the tan h, and if so, how do you have intuition on which ones to choose?
Yes, absolutely. So the question is, how do we choose the activation function besides tan h? You can indeed choose different activation functions. We'll get a little bit later in the lecture how we dictate that intuition. And we'll also see there are examples of slightly more complicated versions of RNNs that actually have multiple different activation functions within one layer of the RNN. So this is another strategy that can be used. So this is the idea now of updating the internal state and generating this output prediction. And as we kind of started to see, right, we can either depict this using this loop function or by basically unrolling the state of the RNN over the individual time steps, which can be a little more intuitive. The idea here is that, right, you have an input at a particular time step, and you can visualize how that input and output prediction occurs at these individual time steps in your sequence. Making the weight matrices explicit, we can see that this ultimately leads to both updates to the hidden state and predictions to the output, and furthermore, re-emphasizing the fact that it's the same weight matrix, right, for the input to hidden state transformation, that hidden state to output transformation, that's effectively being reused and re-updated across these time steps. Now, this gives us a sense of how we can actually go forward through the RNN to compute predictions. To actually learn the weights of this RNN, we have to compute a loss and use the technique of backpropagation to actually learn how to adjust our weights based on how we've computed the loss. And because now we have this way of computing things time step by time step, what we can simply do is take the individual metric of the loss from the individual time steps, sum them all together, and get a total value of the loss across the whole sequence. One question.
Regression differ from setting the bias. A bias is, something that comes in separate from the x of that particular time. This is different than the Serving's bias?
Yes. So what I'm talking about here is specifically how the weights, the learned weights, are updated as a function of, learning the model, and how the weight matrix itself is applied to let's say, the input and transforms the input. In this visualization and the equations we showed, we kind of abstracted away the bias term. But the important thing to keep in mind is that matrix multiplication is a function of the learned weight matrix multiplied against the input or the hidden state. Okay, so similarly, right, this is now a little bit more detail on the inner workings of how we can implement an RNN layer from scratch using code in TensorFlow. So as we introduced, right, the RNN itself is a layer, a neural network layer. And what we start by doing is first by initializing those 3 sets of weight matrices that are key to the RNN computation, right? And that's what's done in this first block of code where we're seeing that initialization. We also initialize the hidden state. The next thing that we have to do to build up an RNN from scratch is to define how we actually make a prediction, a forward pass, a call to the model. And what that amounts to is taking that hidden state update equation and translating it into Python code that reflects this application of the weight matrix, the application of the nonlinearity, and then computing the output as a transformation of that, right? And finally, at each time step, both that updated hidden state and the predicted output can be returned by the call function from the RNN. This gives you a sense of kind of the inner workings and computation translated to code. But in the end, right, TensorFlow and machine learning frameworks abstract a lot of this away such that you can just take in and define kind of the dimensionality of the RNN that you want to implement and use built-in functions and built-in layers to define it in code. So again, right, this flexibility that we get from thinking about sequence allows us to think about different types of problems and different settings in which sequence modeling becomes important. We can, again, look at setting where now we're processing these individual time steps across the sequence and generating just one output at the very end of the sequence, right? Maybe that's a classification of the emotion associated with a particular sentence. We can also think about taking a single input and now generating outputs at individual time steps. And finally, doing the translation of sequence input to sequence output. And you'll get hands-on practice implementing and developing a neural network for this type of problem in today's lab, in the first lab of the course. So building up from this, right, we've talked about kind of how an RNN works and what's the underlying framework. But ultimately, when we think about sequence modeling problems, we can also think of, what are the unique aspects that we need a neural network to actually effectively capture to be able to handle these data well. We can all appreciate that sequences are not all the same length, right? A sentence may have 5 words, it may have 100 words. We want the flexibility in our model to be able to handle both cases. We need to be able to maintain a sense of memory, to be able to track these dependencies that occur in the sequence, right? Things that appear very early on may have an importance later on, and so we want our model to be able to reflect that and pick up on that. The sequence inherently has order. We need to preserve that. And we need to learn a conserved set of parameters that are used across the sequence and updated. And RNNs give us the ability to do all of these things. They're better at some aspects of it than others, and we'll get into a little bit of why that is. But the important thing to keep in mind is, as we go through the rest of the lecture, is what is it that we're actually trying our neural network to be able to do in practice in terms of the capability it has. So let's now get into more specifics about a very typical sequence modeling problem that you're going to encounter. And that's
I'm so tired of paying a ton for phone bills. There's no reason it needs to be so expensive. I finally discovered the ultimate game changer, my wireless plan with Mint Mobile. For the first 3 months, new customers can get the unlimited plan for just $15 a month. Plus, switching over was so easy, I literally did it from home in just minutes. There's so many different data options, so you can find the one for you. You've got to check out Mint Mobile.